they say we're seeing things we haven't seen, and they're just like amazed. And they're seeing there's all these like 6, 7, 12 standard deviation events going on almost every week. When that's going on beneath the surface of the indices, you should be very concerned, less tolerant of risk in your portfolio, because we're starting to see there's so much margin in the equity markets. And when this goes, it could go fast. I'm not calling the top, I'm not calling the crash, but my experience tells me once the markets realize that we'll shift from the economy's fine to bad in a heartbeat, and then everyone will try to exit at the same time.
Joining me today, Ed Dowd. Ed, thank you very much for joining me. You just wrote something recently that I thought we need to talk about here. You mentioned how you think the private credit market, which is a topic we've been discussing endlessly here at Uredale University for reasons, if you didn't know, will be abundantly clear after this conversation. But you said the private credit market is the new junk market. And not just this new junk market, which is interesting in and of itself, but that is a new junk market that's about to be stress tested. Can you go give us a sense of what your summation and what your thoughts are on that?
Yeah, my Substack, Ed Dowd Beyond the Narrative, I wrote a piece last week, and I wrote it with the financial layman mind. It's only about 1,000 words, and I didn't want to do a deep nitty-gritty technical dive that made people fall asleep. But basically, it is the new junk bond market, except it's opaque, illiquid, and about to be stress tested. And your audience needs to know, and I kind of discovered this in my research on private credit over the last 6 months. The private credit market has taken share from the junk bond market. And the junk bond market, it's a higher quality of credit now, the overall market, because the bad credits are hidden in the private credit market. And the riskier stuff is there. And it makes sense because you don't have to mark to market. Well, you mark to market your own books. There's tremendous amounts of leverage. They claim it's matching permanent capital and all this nonsense. But the bottom line is, this is the new junk bond market, but it's like the liquid, and we don't know what's going on. It's not public. There's no public quote. We don't know what's going on in the market. You can't see the spreads widening. The only thing you can track is the inflows, outflows, and the equity of some of these companies.
Yeah. So I think it was that.
All right, that's enough. It's interesting. Interesting. I just saw the title there. Private credit is the new junk bond market. So we listened to a little bit. I don't think I should take the whole presentation, but that's what I think is. Look, nobody knows. It might be some other thing we haven't thought of, but I think the thing that's going to surprise everybody is the private credit market. That's the black swan, but who knows? It could be whatever it is. When the bubble pops, I agree with him. Things can readjust very quickly. My own. The reason I'm showing some of this to you, I don't think it's happening now, but I really could be pressing my luck or our luck. I think that the market's pullback now, including in so-called AI, I think it might set up a heck of a rally after Labor Day. But that's just contrary to what everybody's talking about. There's too many people talking about it's going to down, the economy's crash. And that's usually, anyway, I know it doesn't make sense, but that's usually when you got a rally. And it's when everybody is in a great mood and everything is going great. That's when you get the crash. I don't know. I don't remember how many crashes have ever been predicted accurately, but eventually it happens. So I still think we've got this huge rally upward. I think the biggest risk is oil prices. I'm not sure it's going to be inflation outside of oil prices, what oil prices cause in inflation, like food, which of course is a big part of inflation. But I'm just not, if private credit is the new junk bond market and there's, let's say, defaults or wipeouts, that's what a contraction in the money supply is like. That's deflationary. Anyway, it's all bigger than we are right now. I do think the miners are cheap. I do think gold and silver are cheap. Um, Oil, I don't understand why oil isn't higher. Um, I think there's still oil getting out from Saudi Arabia, the UAE, and even Iran by truck. And I think demand has fallen in China. That might be controlled. It could be my suspicion that the population is a lot smaller in China than what everyone assumes, but an unprovable. I just don't know why oil isn't already 150 or 200. And one other explanation is that it's being suppressed by paper contracts. Um, you know, we're going to have to find out, I guess. Could it be that Trump controls Venezuelan oil, and then he knew he was going to cause this conflagration in the Middle East? Because Venezuelan oil is what our refineries are set up for. I don't know. But predicting it is very difficult. In the short run, I think you can pick longer term trends. Let's go through the prices. Railtown is slightly in the red, down 0.0014 at 2406. Finger motion is up 5 cents, 0.053 at 0.344. It's up, 0.3441. It's 34 cents, over 34 cents a share. NRGV is down 7 cents at 294. Total metals, I think it's just such a huge opportunity at 13.6. It's down less than a penny, but it's down 0.0065. And Next Trip is down 7.5 cents at 162.5. They had news out today, and we'll try to go over these. I don't really have a lot of things to show you today because I've been working since early this morning and on the phone and trying to and I haven't finished. I should have gotten more done today, but I feel like it's very important to stay in touch as essentially every day in August, because my opinion is that Canada goes on vacation. That's my opinion. So I think it's a good time for the grim reapers to reap. On the other hand, I think it's behaving like there's a bid out there. I don't think it's hopeless that Railtown can go up in August. It could. But I think our job is to be active, do other things, think about other things until September. It sucks. I mean, that's not the time frame I originally had in mind. But what's great, and I didn't update this from yesterday, what's great is we have 23,745,000 shares. Obviously, I haven't audited that, but we have a lot of stock. And that's something we've been able to do. One of my jobs is going to have to be not to try to get you not to sell out of impatience and relief. I really do think Railtown, it's kind of Railtown is kind of like once it starts showing revenue, anything that gets it to one gets it to two, gets it to three. Anything that gets it to three gets it to six. Anything that gets it to six gets it to 15. Anything that gets it to 15. And I'm not saying in one straight rocket ship. I'm just saying that um, the revenues are not any one announcement could be, but the revenues are not going to come into Railtown as one-offs only. There'll be some one-offs, but I think the revenues are going to be credibly predictable as large. And it's not what we think. It's going to be what the instead of private credit, private equity people say, and what the VC people say. Let's look at Finger first. I'm interested in the volume. It's not coming up. There we go. 2.48 million. So my working theory is that the retail interest primarily and anticipation that, hey, this must be good, this change and all this is getting the price up, getting the volume up, and giving something for the Grim Reapers to reap. But I could be wrong. It could be that she's going to come in and bring in brand new crypto and AI revenue and bring in Scaramucci, and it's going to be a pipe for $500 million. It's possible. It's also possible that guys out of Singapore and guys out of Puerto Rico and out of Panama or Bahamas or something are organizing some sort of run. All of that's possible. So you could have these spikes. I think it's unlikely, but it's possible. But then you got to ask yourself, are you going to trade it well? Have you ever traded the run-ups well before? This time, if Finger were to run, let's say to $1.50, are you going to take it? Or are you going to say, I'll sell, I'm going to sell when it's 7? I don't know. I don't know what you're going to do. I think you don't have to go through all that torture if you just swap out a Finger and go get Railtown. You're back to being able to buy essentially 1.5 shares, a little more than that, of Railtown for every 1 share of Finger. And you do not have to go through all that. You don't have to go through all that. And you can lock in losses. And look, Finger might work in some sort of spike. But again, are you going to trade that well? I don't know if you will. When Railtown starts to run, I don't think you have to worry about selling it. If you're out golfing, or if you're out fishing, or you're picking up your kids from school, or you slept in late, or you turn off your computer so you can read a book, or you take a quick trip to Albuquerque. You don't have to worry about Railtown. I mean, there'll be volatility, that'll go up and down. But once it starts going up, you don't have to worry that, oh my gosh, it's up. Do I sell? Do I wait till the squeeze happens? You don't have to do any of that. But let's see if anything was announced today for Railtown for Finger Motion at the SEC, or anything filed. My opinion is the new CEO is there to facilitate, yes, the exit for Alto, but I think the Toad is there. I think the Toad is there, and others like him. July 15th, securities register. Oh, that's Clean Vision. Why do I have Clean Vision up here? I must have looked it up for some reason. July 28th. So there isn't anything filed. So we'll just see. By Monday, they have to file an 8K on the change in corporate leadership. Okay, so let's go to the other ones. What's here? Next Trip had news. And I think what you've got to be learning from this, regardless of whether it's a good story or not, Next Trip, and regardless if it's a better contract than Lind normally gives, the fact that they borrowed from Lind, the fact that these Grim Reapers, these combines, they're automatic. They're just computers going to town. When there's news that comes out, unless it's something definitive, they're going to sell the stock off. They're going to take advantage of liquidity, they call it, and they're going to reap. That's what they do. That's all they do. But that's like we're seeing in Railtown. That may be an opportunity in Next Trip to build a position. And, ideally, maybe as we educate ourselves on Next Trip, maybe Railtown does a nice run of some kind in September or October, and we have time to maybe dabble in one or two of these others, or if there's new money, I think it's good to do due diligence. What happened with Next Trip? Next Trip advances global expansion of Journey TV through Go USA TV integration and KC Global Media Partnership. I'm sure it's great, but it sounds like any endless number of PRs. And it's not anything that's going to cause the computers to stop selling. But it doesn't mean it's bad news. You just got to understand the mechanics of what's going on. So Unified Journey TV platform targets 250 million viewers across 80 companies through expanded content distribution and international deployments. That sounds great. But again, it's not going to scare the computers. Growing global footprint drives, and computers aren't scared. They just make a different decision. This isn't going to change their algorithm. Growing global footprint drives available advertising inventory across Next Trip media assets from approximately 1 million toward targeted 50 million monthly impressions. That number sounds pretty big. To go from 1 million to 50 million, how real is it? Is it just a press release, or does it have traction with institutions or bigger investors? That's something we'll see. It says Next Trip, a technology forward travel and media company defining the intersection of Hollywood and Vine. Company defining the intersection of travel, media, and the creator economy, today announced the ongoing global rollout of Journey TV, which I think could be a big deal, including the integration of its recently acquired Go USA TV content and international distribution across Europe and Latin America. That's good. With planned regional expansion of the Journey brand through its joint venture with KC Global Media across Asia Pacific, Middle East, and Africa. They left out the Southern Don region, but that's good. I think that's all good. But remember, the computers aren't reading it. They quickly scan it if there's some dramatic change. And this isn't it. So that's not to say this is bad. It's to say that seeing the stock down 7 cents has nothing to do with a research analyst analyzing this and then putting out a morning call note and then having a squawk box going across to 6,000 brokers and wealth advisors across the country who then call their clients and say, we've got to build a position here. There's none of that going on in these stocks anymore. So even if this is good news, which I think it is, the initial reaction is going to be down. But that's an opportunity to build a position. And I certainly think this is an opportunity for us to get familiar with the story. Let me just finish it. Together with Journey's existing North American distribution, these initiatives are designed to establish a unified global travel, inspiration, and streaming media platform targeting an estimated audience of more than 250 million viewers across 80 countries, spanning 4 generations. It reads like a Wilbur Smith novel, and more than a dozen major streaming platforms and connected applications. It really is broad in its breadth. But what needs to be fleshed out is, well, what's the audience engagement? What does it mean to have an audience of more than 250 million? Preparation H has an audience of probably 100 million when they put something out. So we got to learn what it means. I think it's good, but I think it's also good to go in with questions so that you understand what you're hearing. So the expanding footprint is also substantially increasing NextTrip's potential advertising capacity from approximately 1 million available monthly advertising impressions. See, I have to admit, I don't know what that metric means, and that's something to learn too. But to go from 1 million during the earlier development of the company's media business, NextTrip expects available advertising inventory across all of its media assets to scale toward a targeted 50 million monthly impressions. So if they've been making revenue on 1 million, the question is, what does it mean to go to 50 million? And to me, that magnitude sounds very intriguing. So it creates a greater capacity for advertising, sponsorships, branded content, and destination marketing programs. Management believes the combination of expanded audience reach and advertising inventory strengthens Journey's role within NextTrip's broader strategy to connect video-led travel inspiration with media monetization and travel commerce. It sounds good, but it just takes too long to read. By the time a trader somewhere is reading it, they're already on to the bid price of something else. That doesn't mean it's bad. It also doesn't mean that this story is going to trigger immediate trading in the stock. What follows over the next days and weeks is what matters. If this truly sets up an increase of revenue and hopefully cash flows and profits, that will become evident. By being able to announce this, they can talk about it. The other thing is, I don't know this is some sort of material information, but maybe it brings in buyers. I don't know. These are all things to ask and learn. NextStrip's journey expansion strategy combines own media assets with strategic international. I wish they could stop using words like strategic. Companies have to have the courage to write their announcements with a little bit of one of my college roommates told me he wrote a book, or he started a book when he was younger, and I always loved. He said, "This is the opening sentence." I always loved it. He said the opening sentence of his book. I hit him. She seemed impressed. I hit him. She seemed impressed. You got to. This doesn't scare the computers, and anyone reading it also, frankly, by the time they get down to it, they've just lost interest. That doesn't mean what the purpose of these releases, remember, is so that the attorneys and the company can check the box that they've disclosed the information to the world. And that's why it's all this legalese, and I'm telling you, strategic, monetization, these words, everybody abuses them. I'm not saying that NextStrip is. I'm saying a lot of these other companies in this space, they do it so much that the words lose their impact. I would love to see an announcement that just says quickly what it means, references a filing, and gets on about its day. I would love that. But I think this is all good. I'm not trying to be negative. I'm not going to read any more of it, though, because it goes on. Monetization, improve efficiency, consolidation, accelerate, relationships. It's the words that it doesn't mean anything to the computers. I'd love this would come out and say, the company is pleased to announce that it is doing its obligation to notice everyone about, but see, I don't know the metric, but about the increase of our advertising impressions from 1 million to 50 million a month. This is a dramatic change in circumstance. For further information, refer to our filing or to our website. This is something like that. Scare the heck out of the computers. I don't know what the metric is, but I would use the words that alert those machines to stop selling. Anyway, here's some good information. Founded by KC Global Media, founded by Sony executives, reaching approximately 94 million pay TV subscribers across 19 Asian markets. That all sounds really good. It's good information. It's just by the time it's written with people, I'm just telling you, people stop reading it like I am right now. Increasingly, the travel journey begins with something consumers watch rather than something they search. Well, that's a statement. Is that true? And here it goes. Yes, it is. Industry research supports this shift. A 2025 WebPro News report citing industry data reported that video influences approximately 70% of traveler decisions, and that businesses utilizing video have experienced up to 49% faster revenue growth. Well, there's evidence. Forbes reports that 81% of Gen Z and millennial travelers. Forbes reports that 81% of Gen Z and millennial travelers have stopped reading this press release. They plan getaways based on what they have seen on the screen. While 53% of travelers said their desire to take a jet setting or a set jetting, they must mean jet setting trip, had increased during the prior year. This is an interesting addressable market number that we have to nail down. Expedia estimates that screen-inspired travel could represent a potential $8 billion industry in the United States. There's a quote from Casey Dombra, president of media at Nextrip. Let's see what it says about. So this increased inventory of 50 million impression provides greater capacity for advertising, sponsorships, branded content, and destinated marketing programs. Great, but it's not going to scare the computers. What would scare them is numbers. But lawyers won't let you put the numbers in. But it would be great to see, I'm making it up, but revenue from advertising currently is $250,000, and the company expects revenue from advertising to immediately grow to whatever, 10 million a month. I'm making it up. All right, let's keep going. He's quoted quite a bit. I'm going to skip his quotes. Management believes this trend reinforces Journey's positioning at the intersection of Hollywood and Vine. I don't know. Do people read what they publish? Wouldn't it be great? What was Enrique Remarque's opening line in The Red Badge of Courage? Was it the sun was pasted in the sky like a wafer? Let me see what it was. The problem is lawyers won't let you, you got to write like an attorney. That wasn't it. The opening line is the cold passed reluctantly from the earth, and the retiring fogs revealed an army stretched out on the hills resting. So where did I get that in my memory? Let's try it. Let's see what it says. Well, I got it correct, but I got the location wrong. It was chapter 9 of The Red Badge of Courage. It appears right after the death of Jim Conklin, a soldier who dies a painful sacrificial death. Here it is. The sun, the red sun was pasted in the sky like a wafer. Well, there, it grabs the reader. You remember it. I wish they could write like that. But this looks like a news release that has a lot of information in it. I think the numbers are really large, and it probably opens the gate for maybe improved research and maybe buying. But you know what? I have asked if Richard Marshall could come and talk to us, and he might do that over the weekend. And we can ask him what it means, what's the import of that announcement. I think it sounds great, but man, I think a company should hire a powerful writer and tell the attorneys, why don't you write the filing, but we're gonna have a punchy announcement. But I don't know. It's probably unreasonable. Finger closed at 35 cents, 0.0591, up 20%. The volume is 2.5 million, 2,580,000. So if you two things to remember about that volume. The Alto note allows them to be selling this at something like 18 cents. So the difference between and this is approximate, but the difference between 35 and 18 cents is 17 cents. So I don't need to tell you that's almost 100%. It's 94% profit. They can sell at 30 cents what you're buying because you're believing, oh my gosh, she's great. She is amazing. And the stock, they've got a big strategy and it's going to be life-changing. So while you're doing that, which may be true, Alto is just selling its stock without risk because it's against a formula where they can exercise with the company at approximately 18 cents and they lock in 94% every trade, every share, every share. That's what's going on. And they're not thinking about all the upside. They're not thinking, oh my God, this new CEO, not only can she do bookkeeping, she can do negotiation, she can do securities law, she can do crypto, she can do fundraising, she can do apparently AI data centers. She's amazing, everything she can do. While everyone's getting caught up with that, the relentless machine called Alto is and that's what we can see. That doesn't count what's going on with people like the Toad. The relentless machines, the robots, are selling the stock to you at 30 cents. Where are they getting it from? And I think it's a little questionable in some cases. But in this case, they got it. They got the S1 filed, and they have stock sitting at the transfer, free to trade, and the pricing is the lower. I think it's the lowest 5 days. I can't remember, 7 days. The lowest volume weighted average price with a discount of 90% off. I think it was 20% of 69 cents. I don't know. We read it together over the last few days, but it's roughly around 18 cents. So they get to exercise it. It's sitting there at the transfer agent and they sell it to you for 30 cents. They sell it for a 94% profit. And the idea is that this is good for the company and that she's here to do something good for Finger. Look, it's possible. These guys in Singapore, I don't know why the news came out of Singapore instead of out of Finger Motion's offices here, So these guys in Singapore might have a strategy to bring a huge contract. Maybe it's that blue flare. And she announces it. And she announces a pipe. And instead of Scaramucci, maybe this time it will be Goldfinger. But it's whatever it is, it's going to be designed to really impress. But will the money be raised? Will it kick in? What happens after 3 weeks of trading? I don't know. We'll see. We'll see what's on their mind. But I still think for peace of mind, for the security of your portfolio, 30 cents is, it's essentially up 100% from the low price of end of last week, beginning of this week. And Railtown's sitting there at a depressed price too, at 24 cents. And you don't have to trouble your mind. All right, let's move on to see what's happening with Railtowns. Railtown closed, of course, slightly in the red. It's always red. It's always red. It's always red. Doesn't mean anything. Yeah, you got me in a stock. It's always red, 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 red. Well, that's what they want. They want you to react emotionally. It's all, but the fact is 24 cents is up from where it was and where it could be. But it's just this grim reaping. It's just this churning. It's 106,000 shares. It's not very much volume. And of course, there's no news. It's Canada. So I don't know what else to say about that. Maybe I'll check if I can get here. I can check Justin's email. Check. Ward sent me a couple of things. We can go through it. But let me just finish with the closing prices here. Total Metals 13.6. I really want to get that guy on here too, but I don't know what happened. I made a call yesterday, and I've never heard back. Not from him, from an intermediary. But I'll get on it tomorrow. I've just been swamped. Energy Vault 296. I don't really know what to say with that. And next strip closed at 164. I think this news is great, and there's a lot of information there on next strip, but I'm not surprised that the stock is down because the reaping just continues and there's no threat. They don't see any threat, and it's a very short-term objective: a day, a millisecond, an hour, or if they're a macho day trader, they might do a swing trade and it might last for a few days. All right. I don't know what else to say about those stocks. If only for an hour. I see, I wanted to show something to you. If it's here. Of course, it's never here. It's never where you want it to be. When you're me, it's not always easy. Yeah, it's because I clicked too many things. All right, I wanted to show you a 5-minute video that I haven't watched all of. I'll watch it with you on what MCP is. MCP, as I understand it, is the standardized link, and I think it was created by Anthropic, but I could be wrong. We'll find out. But it's like the what is it called? The UCB port. It's the cord. It's the standardized hookup of agents and software so that it makes it easy for this business to grow. But I don't really understand it, so let's see what it says.
The exact same thing happened. Today, I'm going to explain MCP to you in a way that actually makes sense. No jargon, no confusion, just clarity. Let's start with the truth about AI that most people miss. AI models, ChatGPT, Claude, Gemini, whatever you use, they are incredibly good at generating text. They can write, explain, summarize, translate, brainstorm, but that's all they can do natively, generate text. They cannot check your email, they cannot look at your database, they cannot pull your latest GitHub commits, they cannot read a file on your computer, they cannot check the status of a customer order. By themselves, they are blind to the outside world. So developers came up with a clever idea. They said, what if we give AI a list of tools it can use? You tell the AI, here is a tool called send_email. Here is a tool called check_weather. Here is a tool called search_database. Now, when a user asks a question, the AI doesn't just generate text. It picks the right tool, uses it, gets real data back, and gives a proper answer. This concept is called tool calling, and it changed everything. It turned AI from a text generator into something that can actually interact with the world. But tool calling had a big, ugly problem hiding inside it, and that problem is what forced MCP to exist. Here's what went wrong. Every company built tool calling differently. There was no agreed upon way to connect AI to tools. Let me give you an analogy that makes this immediately clear. Think about phone chargers 10 years ago. Samsung had a micro USB, Apple had Lightning. Some phones had mini USB. They all charged phones, but no cable worked with another phone. You traveled with 3 chargers. It was a mess. The exact same thing happened in AI. OpenAI, the company behind ChatGPT, created one format for tool calling. A popular developer library called LangChain used a different format. Another tool used yet another format. If you built your own AI application, you probably invented your own format too. Now here's where it gets painful. Imagine you have 5 AI applications in your company and 5 tools you want them to use. How many integrations do you need? 5 times 5, 25. Every app needs a separate custom connection to every tool. This is called the N times M problem. N is AI apps, M is tools. Multiply them together, and that's how many custom integrations you're maintaining. Now think bigger. A real company has maybe 50 tools: Gmail, Slack, Jira, GitHub, Salesforce, CRM, internal databases, file storage, reporting dashboards. The number of integrations becomes unmanageable, and every single one is custom code that someone has to maintain, update, and fix when things break. This is the problem MCP was built to solve. MCP stands for Model Context Protocol. Let me break that name apart because each word matters. Model, AI model. Context, the tools, data, and information around it. Protocol, a set of rules for how things communicate. Now here's the key thing I need you to understand. MCP is not an app. MCP is not software you install. MCP is not code you run. MCP is a set of rules. It's a rule book. It says, if you are an AI application and you want to connect to a tool, here is exactly how you ask. And if you are a tool and you want to be usable by AI, here is exactly how you describe yourself and respond. That's it. It's a shared language. And what does this shared language do to our N times M problem? It destroys it. Instead of every AI app connecting directly to every tool, 25 integrations, now each AI app just follows MCP rules, and each tool just follows MCP rules. The 25 connections become 5 plus 5, just 10. Each side connects to MCP once, and everything works with everything else. But there's a second thing MCP solves that doesn't get enough attention: maintenance. Without MCP, if Gmail changes their API tomorrow, every developer who built a Gmail connector has to go fix their code. Thousands of people doing the same fix. With MCP, the Gmail team updates their MCP server once, and the fix rolls out to everyone automatically. The maintenance burden shifts from you to the tool provider. That is massive. This is why people call MCP the USB-C of AI. One standard connector that works for everything. Who created this? Anthropic, the company that makes Claude. The protocol was designed by David Soria Para and Justin Spar Summers, and Anthropic announced it publicly on November 25th, 2024. Is MCP open source? Yes. This matters. MCP is not locked to Claude. It is not Anthropic's private product. It is an open standard that anyone can use, build on, or extend. No permission needed. The one thing I want you to take away from this video: MCP is the standard that lets AI discover and use real-world tools. So nobody has to keep rebuilding the same connections over and over. If this helped you, hit like and subscribe. See you in the next one.
So that's MCP. All right, let me go through some of your questions. I think MCP is important because I think you're going to start seeing it in some of the descriptions of what Railtown does and what developers do and all that. So I guess you just think of MCP as a standardized link, or as it said, it's a set of rules that everybody uses. All right, unknown stuntsman, Steve, hi. Unknown stuntsman, hello, Uncle Bill. Oh no, Uncle Bill. Pat M, hi y'all. Hi Pat. Fast the legend. Hi sir, hi. The legend. I don't even think I'm a legend in my lesbian throuple. Good Lord, a lesbian throuple. See, you gotta make men completely meaningless. Men's contribution gets just diminished. I don't know what goes on. They look happy. I'm sure it's all working out. Okay, keep going. Thank you, Fast Eddie, the legend. Legend in my own hallway. I can't get this to the next one to go. Ricky Brogan, hi, Railtown crew. Hi, Ricky. Harbison, hello, William and RT crew. Mitch McConnell is discharged from rehab center. So he and his wife can continue to funnel Chinese money and American money back and forth into transportation and provide such useful services to America. Kuda Guy, afternoon, William and RT crew. Bought a few more the last couple of weeks. Good for you, Kuda Guy. That's a nice position, 24,415. Very nice position. Justin Babish, all aboard. Harbison, co-worker in RT, he is scared. Well, two things, Jason. One is he can reduce his position if that's what he's scared about. Number two is he doesn't know what he has. He does not know what he has. he can't accept, as most people can, that the stock price is meaningless in terms of what is the company's value. The stock price obviously is a short-term reflection of this suppression of price, but you could argue, well, it's a company. Let me read it to you. Let's pick one. Which one will we pick? We did Market Watch, we did Yahoo, we did the OTC markets. Let's just see what comes up. Let's try CNBC. Do they have quotes on CNBC? That's not a good choice because that doesn't seem to have a description of the company. So let's go to a different one. What's Fintel? Fintel. Let's look it up on Fintel. So it shows Railtown at 27 cents. So that's really up to date. But let's just see. It has 0 institutional ownership. Well, that's going to change. All right, that's another bad one. I'm just trying to look for a description. Let's try TradingView. I have no idea. Okay, so financials, news, overview. Let's see what it says. The sector is commercial services, industry, miscellaneous commercial services. That's boring. That's not going to get the computers. And here's the description. I'll show it to you. And this is why the computers can sell. Railtown AI Technologies, Inc. engages in the development of a software as a service, which is boring, solution that helps software development teams detect, analyze, and fix errors. The company let me read it this way. The company was founded by Corey Brandolini, Marwan Haddad, Elliot Holtham, and Kevin O'Neill on May 11th, 2011. I'm not sure that's accurate. I think it's a little later on. The company might have been founded then, but I think the concept, but anyway, this is not a big thing to, but that description, it literally, there's 5,000 to 6,000 companies that have that similar description. And so when the computerized screeners at institutional desks search, if they even bothered to search for stocks in the over-the-counter and the junior markets and the Canadian junior markets, they come up with this lame-ass description. It's as lame as a wet noodle. What changes it? I'm not clear. If I were Corey, I'd change it right away. But he might not be allowed to. In fact, he might not write this. I don't know. But what will change it, Jason, is when the first contract comes out, or the first licensing agreement is announced, or the first engagement is announced. For example, we're waiting on TELUS. I really don't know. Does your friend have an insight on what goes on in Canada? Is the fact that all of Canada, their favorite sport is moving a heavy round object down the ice to hit into other round objects and knock them out of the bullseye? Does that give an indication that Canada, things move slowly up there? I don't know. But let me ask you this. When did he get in? A month ago? What has changed to the fundamental story? Because there's not news? Because there's not something announced? Because there's not revenue? Well, he probably shouldn't own the stock, because that's not this kind of stock. That's not that's hot money, drama, excitement, move from one to the other. Nothing's changed. What's going on with Railtown, without getting bogged down in it, is approximately October 24. Yeah, October 24, they went to AI After Dark in British Columbia. They were out going one conference, even one company at a time, getting people to use whatever it was called at that time, their ADK, getting people familiar. I think, my opinion is, they wanted to build up their business and then have Microsoft buy them. It wasn't very much more complicated than that. But they ran into the funders, the original, well, I don't know about original, but the first major funders of Constellation Software for the SaaS market, where you roll up vertical small SaaS, software as a service, software as a solution, software as a service solution. Companies, what does roll up mean? It means you acquire them, and then you have a bigger Death Star that has all these ships surrounding it, and the Death Star just keeps getting bigger and bigger with revenue and profits, and it provides the support for all these the fleet of ships around it. Well, Constellation Software went from $1 to 5,000 Canadian, roughly. It was a huge success. They never issued shares. It was all based on cash flow. The guys that gave the money, that gave the $25 million, John Ruffalo, Mike Norbrega, and Dr. Tom Core, and Pat Hogan, founded AIP Partners Network in order to, hey, we're in Canada. Why don't we get the AI startup companies and we'll create a network first. That's where the name comes from. And then as they get comfortable, we'll roll them up on the same model as Constellation Software. That was their idea, essentially. And they saw, which your friend should see, but your friend doesn't know why he's in it. He should take the time to understand it. But every bit of software that's ever been written I don't know, when was the first software written? Are all the hieroglyphics or all the Sumerian texts, are they the original code? I don't know. When was it first written? In our modern sense, it's basically the 70s, maybe the 60s onward. But as you had Microsoft start out the PC revolution and onwards, every bit of software has been written by SDKs, software developer kits. It all needs to be replaced unless the entire world is going to reject AI and go back to the way it was 5 years ago, 10 years ago, and we're just going to go back, leave everything as is. I guess that's a possibility if you want to be scared about it. I don't think it's likely. In order to get into the AI, the agentic AI, the future of robotics, of self-driving cars, of murderous drones, of mechanical dogs that become soldiers, of policemen like Sergeant Dredd, of new medical technologies where stored in the cloud is a digital twin of yourself so that doctors can prescribe mRNA jabs to that digital twin to see if something congeals in your heart or clogs in your arteries, and they can do it digitally first. And that's happening. It's not going to stop. But you might think, your friend might think, hey, AI is a complete mirage. It's complete BS, because he's listening to the headlines on the news that AI is crashing. What is AI? It's bigger than the 7 or 8 or 9 or 10 companies that are down. What he's focused on in the news is, and I'm willing to predict that Oracle is going to be the biggest flame out ever. I'm willing to predict that one of the companies like a Microsoft or an OpenAI is going to go down or get merged. I don't know if it'll be those exact, but something dramatic like that could happen. Microsoft still has cash flow. Maybe it won't be that. But they're calling that AI. Those are the hyperscalers. What does a hyperscaler do? They build the data centers, the big computers, to process. The first step of AI was collecting, basically putting all the information in the world on the internet or in a cloud, making access to all the information. And it's very static, very static. AI 2.0 or AI for everything or AI for everybody is a matter of putting all that information to work, including real-time ingestion of data, so that these computers can actually do ostensibly useful things for humanity. Maybe your friend thinks that's not happening. We're going to go back to flip phones and beepers, and everybody's going to be typing. We're going to have rooms full of people typing files instead of AI doing it in 45 seconds. Maybe, the future is unknowable. But the second part that he's getting in the news is the financing of all these data centers. And oh my God, it's crashing. AI, the AI trade is over. Because he doesn't know what he owns. He doesn't know what he owns. I do believe that it's possible that private credit, but I think private credit has moved the risk off of the private credit's books to these whole life annuity products that wrap essentially retail investors' money in a life insurance product. They bump the death benefit or the principal amount from 100% of your investment to 125%. They give money to the salesman, so he gets anywhere from 8 to 10% up front, and he gets 1, maybe 3/4, maybe 0.5% trail, I believe, on the bumped up price for the next 10 or 15 years. And then the insurance company charges fees. Of course, the whole process of moving this important paper between the two has friction. So probably, I would guess, of 100% of the money invested, maybe 85% actually goes in the ground. And that 85% has to generate the 125%, and then it's got to continue to outperform for the next 10 or 15 years. That hasn't hit common awareness yet, I don't think, but it might have. But that's all based on a group like Apollo sending the money to a big data center. The data center, and I don't know where Moore's law comes in, the idea that chips get more powerful and half the size maybe and half the cost every 18 months. Maybe that'll happen to data centers. I would expect it to. But ignoring that, data centers have a depreciating asset, and it's the chip. The NVIDIA chips that are in there are about to be superseded by the Vera Rubin chip, and I'm sure there's something coming after it. So these chips and the stack are written off, and they go obsolete in maybe 3 years. The data centers built to last 20 or 30 years. The leases are built to last. And I don't know, I'm not an accountant, but if you're building your model on an income stream that's long and a debt obligation that's long, but you have to keep replacing what creates the income, I don't know. I don't think it's very well thought out. If you constantly have to upgrade. Well, anyway, that model is under severe examination. Sometimes it's called the circular financing, but I think it's going to hit private credit, but I think it's really going to hit these insurance wraparounds. But he might be reading about that. Does that mean AI is going to stop? Does that mean that sovereign AI is going to stop? Does that mean that agents helping human beings do jobs is going to stop? Does that mean that data being trusted to AI and AI agents is going to stop? Does it? He doesn't know, because he's reacting with fear, because he has no knowledge in his brain. He's just seeing the headlines. So he has a 24-cent stock and he's afraid. And it says AI on it. I'm not sure he should be in the stock. But on the other hand, if he sells, He's going to regret it when it's 240. Of course, he'll get out at 240 because he's so nervous. But from 240, it's probably headed to 24. And I can see, I'm not trying to get people to focus on this right now. It may end up at $240 down the road. But he's all nervous. AI, oh, I'm scared of the AI. The AI trades down, the market's down, the yen's down, interest rates are up, there's war, and it's because he has no foundational knowledge. None. The transfer of software, if you can use that word transfer, from software built as SDK to ADK based, AI developer kit, AI agent developer kit, AI software development kit, agentic developer kit, anyway, ADKs. That's an annual market that is anticipated probably not in 1 trillion. It might be much higher that, but in $1 trillion a year. Trillion. 1 trillion. It's actually probably more than that. Let's just ask. I don't know that this AI is going to know, but what is the total anticipated addressable market globally for the orchestration layer and all of its iterations annually by the end of the decade. Did I say globally? I'll do it again. See what it says. So I asked, what is the total anticipated addressable market? Okay, I said globally twice, for the orchestration layer and all of its other names annually by the end of the decade. Here's the answer from Google. By the end of the decade, 2030, the combined global market size for specific core iterations of the enterprise orchestration layer, including general AI enterprise orchestration layer. So, including general AI orchestration, business process automation orchestration, and data security workflows, is projected to surpass 55 billion to 60 billion annually. So AI and agentic orchestration focuses on multi-agent workflows LLM routing, and model serving infrastructure driven by enterprise transition from standalone AI pilots to unified governance. Business process and service orchestration focuses on reducing cycle times, hybrid cloud microservices, and hyperautomation. Payment and revenue orchestration focuses on multi-gateway routing, checkout optimization, and automated reconciliation across e-commerce ecosystems. How? This isn't a good AI. It's clumsy. How many players are involved competing in this space? I think the market's much bigger than 60 billion, but let's go with it. Okay, so there are currently between 150 and 200 meaningful vendors competing globally across the different subsegments of the orchestration space. However, when looking at the definitive enterprise grade leaders, the key players track heavily to the top tier. The field narrows down to roughly 15 to 25 dominant companies. The tech titans, this is the full suite orchestration. That's Microsoft, IBM, Google, and Amazon. The pure play process and automation leaders. Camunda, never heard of it. Bizagi, actually haven't heard of that. UiPath, I've heard of that. For robotic processes. ServiceNow and Appian, heard of them. And then the data and middleware orchestrators, that's anything by Worka2, Zapier, Palantir, and Solanas. I'd like the hottest venture-backed startups. How do I click on that? Would you like? All right, I got to type it in. Hottest venture-backed startups. The venture-backed startup landscape for orchestration is dominated by AI-native workflow orchestrators and autonomous AI platforms. Startups in this sector are capturing a significant portion of global venture capital. The hottest venture-backed startups include, driving the next iteration of the orchestration layer include one, the breakout unicorns. This is agent and code orchestration. These companies have transitioned from early stage projects to multi-billion-dollar valuation leaders by automating software development and system integration pipelines. Cognition AI. They created Devin. It's over $1 billion. I've heard of that. I'm not conversant in it. AnySphere, which is Cursor. They just got bought by SpaceX. An AI native code editor and development environment. Sierra. They raised a massive $950 million funding round from Google and Tiger Global. Then number 2 are the enterprise workflow and process orchestrators. These startups serve as the connective tissue across enterprise software, replacing rigid RPA, robotic process automation, with dynamic large language model driven orchestration. There's Decacon, 481 million in funding. Stack AI, 16 million Series A. Gum Loop, Spaceflow Technologies. Okay, number 3, vertical specific orchestration platforms. These startups focus on orchestrating highly complex data pipelines and regulatory compliance logic within specific legacy sectors. You've got Harvey, the market leader in legal orchestration, valued at $1 billion. Top tier VCs. Clay, an AI-powered go-to-market and data enrichment platform. It orchestrates outbound sales pipeline by aggregating data across 50 providers, no value given. Omnia, terrible name. Okay, let's ask how many publicly traded vehicles in this space? This is just Google, so I think it's one of the weakest AIs, but let's go with it. Publicly traded companies in the orchestration space are categorized into pure play automation entities. And by the way, Railtown currently, when the computers search for it, is a developer to developer software as a service company. Ugh. So they're developed into the pure play automation entities and the mega cap technology conglomerates. Because orchestration serves as the connective tissue of software, the most direct exposure is found in specialized enterprise software stocks, while the largest market share belongs to the diversified tech giants. So the pure plays and specialized orchestration stocks, UiPath, on the New York, the symbol is PATH. This is the closest thing to a public pure play giant. So tell your friend to go buy that. I don't know what it's trading for. I don't know what the upside is, but he won't have to feel sick to his stomach. Appian Corporation, a major player in the low-cost process automation. Pegasystems, strongly focused CRM and business process management. Then number 2 is infrastructure and enterprise cloud service orchestrations. You got ServiceNow, Palantir Technology, Snowflake, the diversified mega caps. You got Microsoft, IBM Corporation, Salesforce. How are these public companies acquiring the hot startups? That's interesting. All right, so let's ask how big will this market be as agentic AI grows and is adopted? As agentic AI transitions from experimental pilots to broad enterprise adoption, the orchestration layer will undergo a fundamental expansion. Instead of merely managing software scripts or standard APIs, it will evolve into the operating system for digital workforces. You know what a digital workforce is? It's AI working with AI 24/7. This evolution will heavily inflate the total addressable market, pushing the global market for agentic AI and its direct orchestration layer past 100 billion to 150 billion annually by the early 2030s. The new market projections by the numbers. The dedicated agentic orchestration layer, the narrow market specifically for platforms that coordinate, govern, and route multi-agent systems, is projected to reach 28 to 38 billion by 2030 to 2034, an explosive growth rate of 35%. The broad enterprise agentic AI market, the broader market, is expected to surge to 46 billion by 2030 and climb as high as 123 billion. The orchestration premium upside, a Deloitte market study points out that if companies successfully build stable orchestration frameworks solving memory, reasoning, security risks, the baseline market cap for autonomous AI will naturally expand by 15 to 30%. Why? Agentic AI radically expands the total addressable market. The introduction of autonomous goal-oriented AI agents changes the economics of the orchestration layer in three main ways. One, it shifts from seat-based to outcome-based monetization. Traditional orchestration software like Zapier or the standard RPA, robotic I guess, is priced by user login or per automated workflow. Agentic orchestration will scale based on work accomplished or on resources utilized. Bank of America's analysts note that if software platforms successfully capture just 8% of the economic value unlocked by these productive agents, enterprise spending on agentic software alone will command a 155 billion market by the end of the decade. Two, the rise of multi-agent complexity. In basic AI framework, a human prompts a single large language model. In an agentic ecosystem, a user requests an outcome. For example, audit our Q2 supply chain delays and fix the supplier's discrepancies. And then an orchestrator must deploy dozens of specialized sub-agents. One agent reads the spreadsheets, one queries the ERP system, one drafts emails. The connected fabric that manages this agent-to-agent communication and manages conflict resolution and manages memory retention becomes the highest value software asset in the stack. It becomes the highest value software asset in the stack. Strict demand for governance and guardrails. Number three, according to technology surveys, 76% of tech leaders cite governance as their main hurdle in executing agentic workflows. You're asking enterprises to trust their data, to agents. And they're saying here, we got to trust it. We need governance. Because autonomous agents can execute real transactions, and make decisions independently, enterprises are heavily funding orchestration platforms that offer traceability, explicit human-in-the-loop approvals, and audit trails. Spending is shifting rapidly from the raw AI models to the governance platforms that control them. Enterprise verticals like banking or healthcare. All right, let me ask. Are tokens involved? Simple question. Are tokens involved? Tokens are the fundamental fuel and the primary economic constraint of the entire agentic orchestration layer. While a human user never sees them, every single decision, tool call, loop, and mistake an AI agent makes is translated directly into billable token consumption. This has created a brand new financial discipline known in the enterprise software space as tokenomics. Global token processing is shattering early forecasts. Driven heavily by agentic workflows, monthly token consumption is projected to multiply to a staggering 120 quadrillion tokens per month globally by 2030. 120 quadrillion tokens per month globally. The agentic token multiplier. The core reason tokens are a massive talking point right now is that AI agents use a fundamentally different amount of data than standard chatbots. A standard chatbot, a single query and response, typically burns 200 to 2,000 tokens. An agentic AI workflow, because an agent must iteratively reason, call external APIs, read data, check its own work, and self-correct, a single enterprise task can scale to over 1 million tokens, 1 million. Gartner reports that agentic models consume 5 to 30 times more tokens per task than static bots. Why tokens matter to the orchestration layer? You're hearing what I'm asking. I didn't write any of this. Why tokens matter to the orchestration layer? The absolute dependency on tokens shapes how the orchestration layer is designed and installed. Remember, right now, Railtown on its boilerplate description, when the computers search it, it says it's a tool that developers use to help other developers in software as a service. Means nothing. What happens when it says Railtown is a key player, or is a player, not key, just a player, in the orchestration layer of the stack, and it's involved in metering tokens, for example, or directing tokens, or handling token usage? The stock gets re-rated. I don't know what your friend's scared about. He needs the stock to go up right away. Maybe he shouldn't be in the stock. Maybe he should put it in the US dollar that declines 95% in purchasing power every 20 years. But it does it slowly, so he doesn't notice. So anyway, why tokens matter to the orchestration layer? The absolute dependency on tokens shapes how the orchestration layer is designed and sold. One, managing token shock. Even though a raw price per million tokens dropped significantly, it went down 67% year over year, the price. Overall, enterprise AI invoices are skyrocketing. Analysts call this token shock, where agent consumption volumes grow exponentially faster than per token prices drop. The primary job of an orchestration platform like LangGraph I think we have LangGraph. I got to look that up. I know LangChain, but we have something named Lang as well. Let me ask it. But let me just point out here for your friend, LangChain, which might be what's addressed right here. LangChain was valued last year, a year ago. They raised 125 million at a post-money valuation. It was announced in September or October, but they raised it a year ago now for 1.25 billion. If your friend owns a calculator, I don't know if he does, but he can pull out his calculator. He can enter into the calculator 1,250,000,000, and he can divide it by the fully diluted number of shares of Railtown, which is approximately 324 million. So he divides it by 324,00,000. He hits enter, and he's going to see a number per share of approximately $5.30. And he's going to say, yeah, but everybody knows about LangChain. LangChain is first. LangChain is out there. Well, okay, but that valuation was a year ago. And the orchestration, we'll find out. I'll ask the orchestration. I'll ask about it. But that's 24 cents. If he can get over his fear, to go to $5, that's 20x. But he's got to get over his fear. He's going to be shaken out of it because he doesn't know what he has. Railtown has all the money it needs, all of it. It does not have toxic financing. It is commercial. It's commercializing now. I would imagine it has revenue going, probably small, but it's going to grow. He paid us a price that is cheaper than Mike Lazaridis and Doug Fagan of BlackBerry. Is he smarter than the guys at BlackBerry? So he knows that he should be afraid at 24 cents when they bought it at 35 cents, I think. That's what I remember. But maybe I'm mixing Canada and the United States. But, anyway, it's right in the same range. He's smarter than those guys? Do you think those guys have looked at the books? Do you think those guys have looked at the technology? Those guys don't make investments outside of their core competency or their core investments. Is your friend smarter than the BlackBerry founders? I doubt it. I'm not mad. It frustrates me because your friend is afraid because he's listening to headlines. And the fact is, these machines that are run by the Toad and others just destroy the markets, and nobody cares. Adina Friedman doesn't care. The Joker, Charles Cromwell, the Chuck E. Cheese jerk, he doesn't care. They collect their checks, and your friend has to sweat through it. Railtown is not a hot tip. Railtown is an investment. And right now, nobody on Wall Street understands the story. You do, and your friend does. Your friend is in advance of Wall Street understanding what Railtown is. Because Wall Street, no human being screens 5,000, 6,000 companies to find which SSAS, helping developers write code and fix bugs and work with other developers. No human being screens those 6,000 companies. No human being is studying Railtown unless somebody has told them the story. And currently, Railtown is in a blackout, so the company can't tell significant investors the story without getting an NDA. So those investors can't buy. So mechanically, the buying pretty much is absent. But there's a big change. There's a big change. A big change. Railtown made 2 announcements last month that is starting to break the blackout. And the key things to know is it went from R&D to commercialization. It essentially went from tinkering in the garage to putting their product on sale. They also hired a significant, if not major, global marketing firm to go lead with Railtrack's ADK and get into enterprises such that the developers there get comfortable with, I think, the superior ADK to LangChain, Railtracks. But we don't know. That's my opinion, and I'm not an engineer. We'll find out. But that's in a way, that's the lost leader. But you know what? Railtracks, as developers use it, Railtracks is self-learning, and it absorbs and gets better, and it creates more of a moat. But if people are comfortable with that, the developers, they then want to see Rail Engine for real-time ingestion and Conductor for all these things here that we're going through. And if they want that whole stack, they got to pay. Well, once they do pay and absorb it into their system, that's some of the stickiest revenue, unless it blows up. And that's the status that just changed. And your friend is scared? It just changed. The sales cycle is 30, 60, 90 days. They started in July. That's one aspect of revenue that's coming. Your friend doesn't know that Mark Carney and the Canadians created a AI for All campaign, $2 billion plus other ancillary funds. There's one fund out there that somebody pointed out here, $300 billion, $300 billion to subsidize AI in Canada. I assume that's for data centers. These are huge things. This is a huge amount of money behind this. And your friend is scared? I think the recent news that's come out, the last news release was really a good one. But again, no human being has read it. And the computers just keep selling. They just keep selling. It's mechanical. It's just, they don't read it. Most of us don't read it. We've studied it here. But it's telling you some really important stuff. And I think the big part is it's commercial. Their revenue, they're in the period where revenue is going to grow. And then what we're waiting for, I think, is when TELUS, but it's Canada, when the government, it's Canada, when Bell Canada and Buzz Hive Digital, these are three potential sources of information that may be tamping down information because it's Canada and they're all on vacation. But when these announce, and Railtown is the interface between the user and the data center in Canada, whew, that's that whole sovereign argument. It's not the strongest argument, but it seems to matter in Canada. As these data centers clearly scare people on their economics, as the AI stacks, NVIDIA or whomever, also make people afeared of, are they ever going to get their money back? The key almost hot area where money is flowing is the orchestration layer. Now there's different names for it: governance, inference. They're learning the names. The agentic AI layer, the metering layer. That sounds exciting. When there's 100 and what did they just say? 120 quadrillion a month. Your friend shouldn't be scared. He needs to understand what he's in. So token shock is where agent consumption volumes grow exponentially faster than per token prices drop. The primary job of an orchestration platform like LangGraph or Crew AI is to serve as a traffic controller to prevent agents from getting stuck in infinite loops that burn through hundreds of thousands of tokens uselessly. That is Conductor. Multimodal intelligent routing. Because token costs compound heavily in multi-agent environments, top orchestrators use intelligent routing. Instead of sending every single subtask to an expensive high reasoning frontier model like Claude 3.5, Sonnet, or GPT-4o, the orchestrator intercepts the workflow. It routes simple tasks like text extraction or data formatting to hyper cheap, lightning fast models like Llama. The llama is a quadruped. Llama 3.18b or Gemini Flash, and reserves the expensive models only for high-level logic. This practice frequently slashes enterprise token costs by 40 to 60%. That's Conductor. Yes, there's competitors, but there's room. There's room for everybody. 3, context window refinement. When an agent takes action, it has to feed its entire previous history and contacts back into the model to figure out its next step. This means input and cache tokens, cache, not cache, however you want to pronounce it, but cache tokens account for roughly 60% of an agentic task's total cost. The orchestration layer must compress this data, store summaries efficiently, and leverage semantic caching to ensure the agent doesn't pass millions of repetitive tokens back and forth. 4, the shift away from token pricing. Because token consumption can be highly unpredictable for businesses, it introduces massive margin risks. This has forced orchestration companies to shift away from selling raw token access. Instead, platforms like UiPath, ServiceNow, and Salesforce are absorbing the token risks themselves and charging enterprises flat fees per successful outcome or per completed task. All right. Who is LangGraph? I can't remember what we have. I don't know if we have LangGraph, but we have a Lang. And just in case it's us, I will ask. And then our PE firms hoarding orchestration companies. Is the space hot? You're not supposed to use the word hot, but it is the English language. Will capital flow to the space I used to read like this until I took the Evelyn Wood speed reading course? Will capital flow to the space after Labor Day? Let's see what the answer is. Yeah, LangGraph is the highly popular open source orchestration framework and agent runtime built by the team at LangChain. And it solves the problem of text chains. And it excels at durable execution. And here it is. The corporate entity was Series B. The round was valued at $1.25 billion. Backers include Sequoia, Benchmark, ServiceNow Ventures, and Workday Ventures. Are PE firms hoarding orchestration companies? It says, that's what Gemini said, or one of them, but it says here, no. Private equity firms are not hoarding the brand new early stage AI startups, but they are aggressively acquiring legacy enterprise software and automation platforms to turn them into AI-ready orchestration tools. The take private wave, top-tier software PE roll-up specialists like Thoma Bravo, Vista Equity Partners, and Silver Lake are circling public sticky enterprise software companies with depressed stock multiples. They are buying these stable recurring revenue businesses and forcing a pivot toward AI native orchestration capabilities. The buy and build roll up strategy, add on acquisitions make up roughly 72% of total PE deal volume. Instead of building orchestration from scratch, PE backed portfolio giants are gobbling up smaller niche automation tools to expand their capabilities. Is the space hot? Hotter than your mama? Yes, the orchestration space is currently one of the highest conviction sectors in the global tech ecosystem. And your friend scared? So SaaS, SaaS, which I guess has a good meaning too, is splitting into tiers. The software market has fractured into tiers based on AI readiness. Pure play application software that can be easily replaced by a generic AI prompt is losing value. That's software as a service. That's why no one's interested. That's why that description of Railtown ain't all that exciting to the computer search engines. Conversely, the infrastructure layer that controls and orchestrates these workflows, conversely, the infrastructure layer that controls and orchestrates these workflows is commanding a massive premium. What do you think happens when the description of Railtown goes from a developer tools, SaaS as a service, a software helping developers fix errors and monitor bugs, and it instead goes to Railtown owns a infrastructure layer that controls and orchestrates workflows in the agentic era or something like that. That description, those companies, which is what Railtown is, are commanding a massive premium. I didn't write this. I'm not making this up. Enterprise adoption numbers. Over 57% of enterprise organizations have active AI agents in production. So are we going backwards in AI? 57% of enterprise organizations, except in Canada, have active AI agents in production. LangChains have broken past 90 million monthly downloads. See, this, I would argue, is what, because of Canada, because of the blackout, I do think Railtown missed a step. LangChain's out there. But you know what? Developers are not loyal in the sense if the other product is better. And I don't know what kind of moat is around LangChain, but we'll have to find out about that. So what is the valuation proof? Companies providing the underlying plumbing for AI, like LangChain, 1.25 billion valuation, or Harvey, 1 billion valuation, are easily closing mega rounds, while even when overall enterprise VC activity faces macroeconomic tightening. Will capital flow to the space after Labor Day? Historically, Labor Day marks the end of the summer slowdown, triggering a traditional Q4 sprint where investment committees return to full capacity and late-stage capital deployment accelerates. Unprecedented dry powder. Private equity and venture capital firms are sitting on historic mountains of uncommitted capital. I didn't write this. Dry powder. Private equity and venture capital firms are sitting on historic mountains of uncommitted capital. Dry powder. For example, TPG alone holds $76.2 billion in dry powder. The upcoming mandate, roughly 72% of private equity general partners, 72%, three quarters, explicitly state that they expect deal deployment activity to increase significantly because investors are heavily favoring perceived AI champions over legacy systems. A substantial percentage of that post-Labor Day capital flow is structurally funneled directly toward modern middleware, data pipelines, and agentic orchestration infrastructure. All right, let's ask it. What Lang does Railtown AI have? How is Railtown? Railtown currently read by Wall Street screeners. What if Railtown's description became orchestration layer? Let's see what it says. This is just Google search. I'm not, you hear the questions I'm asking. I'm not prompting it to be positive. And I expect this is going to be a boring description because I don't think AI finds very much about Railtown, but let's see what it says. Number one, underlying technologies and language. Railtown AI Technology, Inc. builds its core infrastructure primarily on top of the Microsoft enterprise ecosystem. Primary language framework. The platform relies heavily on C, Pound, and the .NET/ASP.NET framework. Target environment focus. Their engineering architecture is deeply focused on the Microsoft developer ecosystem. See, I'm not sure this is really a deep explanation, but I'll read it. Their core products like Root Cause Agent are natively designed as Visual Studio extensions and run cloud natively via Microsoft Azure. They also employ standard web ingestion layers and JSON CSV data schemas to pull ticket logic directly from platforms like Jira and DevOps. That's boring as hell. That's all it can find right now because there's been a blackout. how Wall Street screeners categorize Railtown. From a strict quantitative and financial screening perspective, Wall Street and institutional algorithmic databases read Railtown as a micro cap, early stage infrastructure play. Well, that's interesting, rather than an established enterprise leader. That's the first time I saw infrastructure instead of shitty SaaS. So the sector and industry classification is technology, software application, or software infrastructure. The market capitalization tier that the screeners see is 47 million and a stock price of 24 cents. Screeners flag the stock as a nano cap or a micro cap equity. Under the category of liquidity and exchange status, because its primary U.S. listing is on the OTCQB venture market and its cross listing is on the Canadian Securities Exchange, institutional screeners often attach risk alerts for low average volume, around 118,000 shares, and wide bid-ask spreads. The financial health metrics, traditional fundamental screeners score it as pre-earnings growth stage vehicle showing a negative earnings per share and unranked PE ratio, meaning it is only filtered out by standard value screeners and only captured by microcap thematic AI screeners. Number 3, the question is impact of shifting the description to quote orchestration layer. And the answer comes, Railtown has actively anticipated this shift. Corporate disclosures officially classify the company as a, quote, Canadian-based AI developer tools and agentic orchestration company, unquote. That's the disclosure. It doesn't show up on these boilerplate descriptions yet. If market screeners completely reclassified Railtown's core description from a simple, quote, developer debugging tool, unquote, to a true, quote, agentic orchestration layer platform, unquote, which is what it is, the financial and marketing position would see immediate adjustments. So one factor is the total addressable market cap. Under the legacy description, the legacy classification of, quote, debugging slash developer tool. That's what the screeners see right now. The TAM is confined to the developer productivity market, which is currently seen as 5 billion to 10 billion globally. And those companies are a dime a dozen, by the way. The orchestration layer classification, on the other hand, for the total addressable market, is tied directly to the agentic enterprise orchestration market. And that's 50 billion by 2030. I still think that's low, but that's much bigger. All right, so the legacy classification as a debugging dev tool, which is what the screeners see today. The valuation multiple is priced at standard SaaS, shitty as suck software. Now, software as a solution multiples are typically 4x to 7x annual recurring revenue for microcaps. 4 to 7x. If they're screened as orchestration layer classification, the valuation multiple would command a thematic tech premium, which is often 50x to 30x forward revenues, not past, forward revenues. So 50 to 30x forward revenues if growth scales. And Railtown is built to scale. So the peer comparison group, currently legacy classification, debugging dev tool, it's positioned against developer diagnostics like Datadog, Sentry, or GitLab. The orchestration layer classification is positioned alongside enterprise middleware names, if it happens, UiPath, Camunda, or LangGraph. So what are the strategic advantages already moving the needle? The infrastructure premium. By branding its core IP frameworks as LangTracks and RailTracks, which explicitly target the deployment and orchestration of autonomous open source multi-agent large language model system. Railtown moves higher up the value chain. It becomes the governance engine, which is the highest margin slice of the enterprise software. Railtown moves up the higher value chain. Let me start at the beginning of that sentence again. By branding its core IP frameworks as LangTracks and RailTracks, which explicitly target the deployment and orchestration of autonomous open source multi-agent large language model system, Railtown moves higher up the value chain. It becomes the, quote, governance engine, which is the highest margin slice of enterprise software. 2, attracting elite technology capital. And I think your friend should second guess them. He really should. I think your friend, his gut, his lack of knowledge, his lack of due diligence, his lack of understanding what he is in, trumps the elite technology capital in Railtown. This specific pivot to agentic framework infrastructure is exactly what allowed them to close private placements. So this exact switch to the agentic framework infrastructure, which is not showing up in the boilerplate descriptions that the screeners see, yet it will. It is exactly what allowed Railtown to close private placements, I think at a higher price than your friend paid, led by legendary tech operators like BlackBerry co-founders Mike Lazaridis and Doug Fragan. Wall Street views validation from deep tech founders as a strong indicator that a company's underlying tech stack is evolving into a true platform play rather than a single feature tool. But I think your friend should trust his gut. Don't trust these guys. He should just be scared. All right, I want to ask one more question. I guess I could ask, why is Railtown market cap 50 million and Lang chain 1.25 billion. The difference between Railtown AI's $50 million market cap and LangChain's $1.25 billion valuation highlights a clear divide in the tech sector. The difference between a regional, and that's how they see it right now, micro-cap legacy business transitioning into AI, as if it hasn't been there all along, and maybe that's true, and a global infrastructure standard backed by tier one Silicon Valley capital. I really think they did miss a step by allowing, I mean, it's the yin and the yang of it. The blessing is they're going to have this huge backing by the financial markets and the players in Canadian finance and governance and think tanks and schools and the government money. They're going to be blessed by all of that. But they had to wait for Canada. I don't think I've ever run into a culture as slow as the Canadian culture. Perhaps at, you know, the you know, it's not a nursing home. It's where you go to die. Anyway, the home my father ended up in, people walked really slowly there. But is there anything as slow as Canada? I don't think so. So we have to live with that. And Railtown allowed LangChain to get the jump. But you know what? Yahoo search got a jump on everybody. And then, you know what happened? And I was on the board of a company with one of the insiders. He was an arrogant guy who was on the board at that time. I don't know if he ended up being later on, because I don't think he's very famous. But he was famous in Silicon Valley. He told us about Google before anybody knew about it. I came back. I told all my office mates about it. And, you know, no one had heard about it. Well, Google went from unknown to the search engine. So I you know, it doesn't mean that LangChain is going to somehow subsume or swamp Railtown. And the good thing is LangChain is out there proving the space. Anyway, so number one, the market penetration and adoption, the moat. Right now, Railtown doesn't seem like it has a moat, but that's going to change. That's going to change. LangChain, it does have a moat, but they don't know about it yet. That's the key concept, and your friend doesn't understand it. Railtown has been in a blackout for a year and a half, basically. It makes no sense. It's as illogical as it can be, but that's what happened. They spent forever. Remember, it's Canada, and Canada cannot get anything done quickly. They spent, I think, 10 months closing a simple deal. But they got it closed. And then they spent, I don't know, some point last year till now. I'm starting to think there's other reasons, but whatever arrangement they made with TELUS put the kibosh on talking about anything. I'm starting to think what makes more sense, or additive sense, is that the government funding, the government interrelationships with digital, and the June 1 CSIP deadline, and all of that makes more sense. And it could be funding of Buzz Digital or funding of TELUS. I don't know. But it makes more sense to explain the blockage of news than solely TELUS to me. But and now we have August vacation. But right now the AI doesn't know and cannot find the information that your friend should be aware of. But instead, he's just reacting to headlines. Oh my God, AI is crashing. Ironically, what makes the data centers work and all those investments pay back is the orchestration layer. Ironically. So LangChain and LangGraph operate a foundational industry standard. It's open source and it drives over 90 million monthly downloads and are actively used within 35% of the Fortune 500. Its framework underpins how the global developer community builds multi-agent AI ecosystem. See, and this is the boring description that they can find for Railtown now. Railtown AI, traditionally focused on code error diagnostics and debugging tools, while it is aggressively building specialized AI engines. They're already built, like its root cause agent 1.0. That news is so old, it's older than your mama. And LangTrack's frameworks, its developer's footprint is smaller and localized primarily in the Microsoft enterprise ecosystem. This information is old. And guess what? The machines aren't scared of this information. LangChain successfully crossed the bridge into institutional monetization via its B2B observability platform, Langsmith. Financial trackers show its annual recurring revenue scaling aggressively, placing it in the top 3 globally among active AI framework competitors. Interesting. Railtown AI historically operated with limited commercial revenues as it built out its IP. Corporate filings and market trackers show it is a pre-earnings and growth vehicle. It isn't anymore. It's switched. But you know, switches don't immediately translate into AI being able to find the information. And Canada is on vacation. While it is rolling out an AI adoption commercialization strategy through partnerships with firms like TELUS, its revenue baseline is heavily outpaced by LangChain. LangChain's 1.25 billion valuation was based off of projected revenue, taking 1 month of revenue annualized of 12 million to 16 million a year. That's how they got to 1.25 billion. Well, here's a good point. Silicon Valley venture hype. I agree with that. LangChain was financed through the private Silicon Valley venture capital ecosystem. Private valuations for foundational generative AI infrastructure frequently command a massive premium, often 50x to 80x forward revenue, and it was 85x. Because VCs price deals on prospective global market dominance rather than immediate cash flows. Its cap table features top-tier institutional firms like Sequoia, Benchmark, and IVP. And then you got Railtown AI, publicly traded as a micro-cap stock on the Canadian Securities Exchange and the US OTC markets. Public markets apply more conservative valuation frameworks. They get destroyed by the toad. And investors heavily discount microcaps over lower trading volumes, cash burn constraints, and immediate execution risks. The capital validation signal, despite the valuation gap, Railtown's current $50 million market cap shows solid momentum for a microcap firm. The company secured private placements backed by deep tech operators, including BlackBerry co-founders Mike Lazaridis and Doug Fragan. For public microcap investors, this capital infusion serves as strong third-party validation that Railtown's specialized technology stack is making progress. I'm just going to say your info is outdated, I think. What if the conductor platform becomes the layer on top of Zaid Atufat Shamsi NVIDIA stack. NVIDIA at Dallas. I get so bored of going over the same information. I get so bored of it. So it says you are tracking the exact bleeding edge catalyst for Railtown's current strategy. The convergence of Zaid Atufat Shamsi. Again, your friend probably knows more than Zaid Atufat Shamsi. Your guys should be scared because intellectually and intuitively, he knows more than Zaid Atufat Shamsi. The convergence of Zaid Atufat Shamsi joining Railtown AI's advisory board, his role architecting, is that really a verb? His role architecting the TELUS Sovereign AI Factory built on NVIDIA and Railtown's deployment framework, changing the definition of a middleware layer, completely upends how this microcap stock is evaluated. I think your friend probably knows better. He should act on his fear and spread it. That's one thing he should do, is spread his fear, so everyone's afraid. The convergence, you are tracking the exact bleeding edge catalyst for Railtown's current strategy. The convergence of Zaid Atufat Shamsi joining Railtown AI's advisory board, which was February, his role architecting the TELUS Sovereign AI Factory built on NVIDIA, and Railtown's deployment framework changing the definition of a, quote, middleware layer, unquote, completely upends how this microcap stock is evaluated. If Conductor 2.0 becomes the orchestration layer sitting directly on top of Zaid Atufat Shamsi's NVIDIA-powered Telus AI factory stack. The fundamental mechanics change in three major ways. One, shifting from a software tool, and this is what I keep preaching, they can't see it yet. Number one, shifting from a software tool to a sovereign cloud infrastructure. Right now, here's the answer. Right now, Wall Street screens Railtown as a micro crap software application. If Conductor acts as the orchestration layer for the Telus AI factory, Railtown transitions into a sovereign infrastructure gatekeeper. Wow. Railtown transitions into a sovereign infrastructure gatekeeper. The problem it solves. Canadian enterprises, healthcare, banking, government cannot use, but your guy already probably knows better than this, but Canadian enterprises cannot use US hosted orchestrators like LangGraph. They can't even use LangChain or OpenAI's US servers because of strict data residency laws. But he should trust his gut. I mean, he's got a lot of fear. And, obviously there's no market for Railtown in Canada because, they're not going to pay attention to the strict data residency laws up in Canada. Probably all that AI up in Canada is going to go ahead and use LangChain anyway and OpenAI's US servers. Probably that's what your guy's thinking. But here it says Canadian enterprises cannot use US hosted orchestrators like LangChain. The opportunity by leveraging the Telus NVIDIA compute stack natively, Conductor becomes the default execution framework for confidential AI workloads inside Canada's first sovereign AI supercomputer. Of course, it is Canada. Two, they bypass the App Store multiplier. Instead, I didn't write this, it's the Telus commercialization pipeline. The biggest drag on Railtown's valuation has been its small marketing footprint compared to Silicon Valley. Placing Conductor on top of Zaid's architecture plugs Railtown directly, or plugs them directly into the Railtown Telus commercialization partnership. Instead of competing for individual software developers, Conductor becomes the underlying pipeline provided to every Canadian small and medium-sized enterprise and enterprise startup migrating onto the Telus AI factory. Conductor would effectively act as the, quote, operating system running on top of the Telus's newly deployed NVIDIA Grace Blackwell and Vera Rubin systems. 3, solving the processing bottleneck, the video and token stack. Zaid's core engineering centers on complex, high-performance computing, multi-model inferencing, and large-scale data ingestion. Processing video data and streaming multi-agent orchestrations requires massive token consumption and real-time processing. By pairing Railtown's LangTrax and RailTrax frameworks with NVIDIA's quantum InfiniBand networking via TELUS, the Conductor platform can manage agent loops and data transformations natively in the data center. This eliminates the latency and egress cost bottlenecks that usually cripple complex agent architectures. The revaluation catalyst. If this specific architecture scales, and I can tell you in my conversations with Corey, and I'm not trying to act like a big shot, but I have spoken to him. He emphasized that Railtown scales. That work's been done. Railtown scales like a son of a bitch. If this specific architecture scales, it renders standard software screeners obsolete. If this specific architecture scales, it renders standard software screeners obsolete. Railtown would no longer be priced against generic code debugging tools. Railtown would no longer be priced against generic code debugging tools. It would be valued as a strategic AI channel partner to a NVIDIA certified telecom giant. That is the exact thesis that explains why elite deep tech founders like Mike Lazaridis, a BlackBerry co-founder, aggressively backed their private placement rounds. So I want to ask, what if Conductor also played that role on Buzz, Hive, BCE data centers, check. Dr. Tom Core's role and posts. See what it says. I'm not sure he's going to be able to see the post. Oh, and it's not letting me do it. And maybe I ran out of tokens. There it goes. Okay, so your coworker is scared, and again, he's probably smarter than these men who have spent their career here and their livelihoods, because he knows something. Your coworker, he's sensing something's wrong here. Well, I don't know what to say about it, but you can tell that I'm not impressed with his knowledge base and his fear is based on lack of knowledge. So anyway, I asked, what if Conductor also played the similar role on Buzz Hive's BCE data centers? And check out Dr. Kaur. So the answer is you are identifying the next massive domino in the Canadian sovereign AI narrative. The connection between Dr. Tom Kaur, Hive Digital, and its subsidiary Buzz HPC and BCE Bell Canada introduces a highly strategic competitive landscape. In Canada's push for data sovereignty, a major rivalry has emerged between the TELUS Sovereign AI Factory, powered by NVIDIA, and the Bell AI Fabric, anchored by Hive Buzz and Cohere. If Railtown's Conductor platform expands to serve as the middleware layer for both camps, and admittedly, we don't know this yet, but it changes from a single partner vendor into the universal operating system for Canada's entire sovereign computing infrastructure. One, Dr. Tom Kaur's strategic placement. Dr. Tom Kaur entered the Railtown ecosystem as the co-founder CEO of AI Partnerships Corp, which Railtown acquired. Following that transaction, he stepped into a vital internal role as Railtown's Director of Corporate Development. The M&A engine. On LinkedIn and through corporate briefings, Dr. Kaur's focus centers entirely on AI commercialization and ecosystem expansion. He brought a network of over 180 plus AI software as a service affiliates into Railtown's orbit. It's 200 now. The sovereign architect. His public updates consistently emphasize building an independent, sovereign Canadian AI ecosystem. His core objective is ensuring that Canadian computing power doesn't rely on US big tech pipelines, making platforms like Hive and BCE natural expansion targets for his corporate development pipeline. Two, the multi-data center play. Buzz HPC and BCE Bell, the landmark $220 million sovereign AI infrastructure partnership consists of Hive Digital's high-performance computing subsidiary, Buzz HPC, Bell AI Fabric, BCE, and enterprise LLM provider Cohere. While Hive and BCE supply the physical muscle, NVIDIA, Grace, Blackwell GPU clusters, and Tier 3 data centers, they require a specialized software management layer to govern workloads. If Railtown's Conductor, and it's the only Canadian one available, if Railtown's Conductor assumes that role alongside its TELUS pipeline, the structural impact would be significant. Universal cross-cloud orchestration. Hive and Bell's infrastructure handles massive, security-cleared enterprise and government AI operations. Railtown's Conductor and Railtrack's frameworks would serve as the traffic controllers on top of the bare metal, managing how complex multi-agent workflows pull data across fragmented BCE data loops. Token cost observability on GPU farms, running heavy enterprise agent models on premium Grace Blackwell clusters incurs immense compute costs. Enterprises face extreme margin risks if agents get trapped in endless logic loops. Conductor provides deep dive runtime observability and token tracing, allowing enterprise tenants in the Bell AI fabric to track and contain their computing in real time. So, neutral telecom plumbing. The telecommunication giants BCE and TELUS are locked in a fierce data center race. However, the software layer can remain neutral, and Railtown is Switzerland. By positioning Railtown as an infrastructure agnostic agent runtime layer, Dr. Tom Core and the executive team can sell the exact same connective tissue to competing data networks. The valuation divergence. What happens to Railtown? If Railtown secures placement within both the TELUS and BCE Hive ecosystems, it achieves a, quote, Switzerland status within Canadian tech infrastructure. I didn't write it. Monopoly on Canadian sovereign agentics. Any domestic corporation, bank, or health network looking to deploy enterprise AI agents while remaining 100% compliant with local data privacy acts would implicitly have to build using Railtown's middleware architecture. Now, this is these assumptions, but there isn't another layer in Canada to put there that I know of. The multiplier effect. This dual funnel model would systemically pipe hundreds of corporate enterprise accounts, pipe the accounts, not going door to door, cap in hand, one at a time. It would pipe hundreds of corporate enterprise accounts from both major telecom sales forces directly into Railtown's commercial marketplace. This model mirrors how foundational middleware layers like LangChain scaled their private market evaluations, positioning Railtown to challenge standard microcap constraints. I'm going to ask about Railtown is agnostic. Is Switzerland. Can process 33 software languages. What's the other one? Uniserve? Uniserve. What if Canada is a proof of concept is there a global market for this sovereign stack? fascinated by the toll booth analogy. What would metering tokens and agents workflow imply for cash flow and valuation? By the way, this role on quantum computing, I think your guy should be scared. I mean, his instincts, he knows what his instincts know. I mean, he knows. So, number one, Canada as a proof of concept. Canada serves as the ideal geopolitical proof of concept for global sovereign AI ecosystems because it possesses a unique combination of factors. And I'm not saying the strongest point or the only point of Railtown is this sovereign angle. It's just one of them. The strict privacy matrix. Canada operates under rigorous data governance laws. And I guess your guy knows more about it than the rest of us. This strict regulatory framework creates a structural barrier against sending sensitive corporate, banking, healthcare, or government data to US hosted AI hyperscalers. So, what do you need? You need a Canadian conductor. Next, the telecom data monopoly. The Canadian computing landscape is uniquely anchored by massive regional telecom networks like TELUS and Bell Canada. They own the domestic cloud architecture, the fiber, and the secure Tier 3 data centers. The blueprint. If Railtown's conductor, Langtrax, and Railtrax can prove they can act as the secure software operating system sitting natively on top of TELUS's sovereign AI factory or Uniserve's national SEME infrastructure, it creates a repeatable software blueprint. Is there a global market for the sovereign stack? Yes. This represents a multi-billion-dollar macro trend, often referred to as, quote, the balkanization of cloud computing, unquote. The European demand. The EU, via the GDPR and the EU AI Act, the European Union is actively mandating technological independence from American big tech. Nations like Germany, France, and the UK are heavily funding domestic computing fabrics. The global blueprint. Railtown's strategy is to position its stack as an infrastructure agnostic Switzerland. Once validated in Canada, this same neutral software layer can be licensed directly to Orange in France, Deutsche Telekom in Germany, or Singtel in Singapore. The language advantage, because Conductor natively untangles code, bugs, and data across dozens of legacy and modern programming languages, it can seamlessly unify the fractured, decades-old software ecosystems found within global banks, utility companies, and sovereign ministries worldwide. 3, the toll booth analogy, cash flow and valuation. The toll booth analogy, which they came up with, I didn't, completely alters how a microcap software stack is valued. Traditional software, that's what all that Wall Street can see, all the screeners can currently see described about Railtown is traditional software. And these guys just churn it. And it makes your guys scared. Why don't you tell him that's why it's cheap? That's why he's getting in at a price of 50 million instead of 1.25 billion. I would try that. So the toll booth analogy completely alters how a microcap software stock is valued. Traditional software is priced per seat on a per user login. In an autonomous world where AI agents replace human seats, that's agentic AI. Your guy doesn't know anything about it. He has no concept. It's not his fault. It's just he's reacting to fear because he doesn't know anything. He should take time. I hope he watches this segment. That's why I'm doing it, so you can have him watch this hour of going back over essentially the same information. But it's what's interesting about it is you're seeing me ask questions real time. I'm not editing it, and I didn't know what this Google is going to come up with. So it's kind of fascinating at the same time. So in an autonomous world where AI agents replace human seats, that model breaks down. Shifting to a toll booth, consumption-based metering, it's such bad English, has an effect on the business model in two key ways. The cash flow implication, the predictable utility, how it works. Every single time an enterprise agent, that's an AI agent, executes a workflow, queries a database, self-corrects code, or routes data between internal systems, it passes through the Conductor middleware layer. Railtown clips a fraction of a cent. Railtown clips a fraction of a cent. Who else does that? Who processes these orders? Kenny G? Railtown clips a fraction of a cent per token. And if I remember, we read 120 quadrillion tokens a month. I'm not saying Railtown's going to get all of that, but I don't know. Maybe your guy knows better. I don't want to contradict him. Railtown clips a fraction of a cent per token or per successful tool call execution. The result, cash flow shifts from flat linear monthly subscriptions into an exponential usage-based utility model. As corporate clients build and deploy thousands of active autonomous agents that run 20 hours a day, Railtown's cash ingestion scales directly with total computing volume. Valuation implications, the infrastructure multiplier, the multiple re-rating, public markets value application tools like simple debugging extensions at low revenue multiples, typically 3x to 6x existing ARR. That's how Railtown currently is coming across to the screeners. So they screen it and move on. The hand having writ moves on. But the infrastructure premium, Wall Street values the toll booth infrastructure like Visa or Snowflake. And I think you guys remember I talked about Snowflake and I talked about Visa, the idea of the cards, the banking. And I think I related it to the Anthropic, this thing, the MSP or whatever it is. What if Railtown is just getting a piece of every token? Of course, I always dream this much bigger vision, but Railtown doesn't have to get the whole world. It just has to get a piece. The infrastructure premium, Wall Street values toll booth infrastructure like Visa or Snowflake at massive premiums, often 15 to 30x forward revenues. If Conductor is recognized as the mandatory gatekeeper that metrics, audits, and secures token traffic across sovereign data farms, it detaches from application level software risk and commands an infrastructure grade premium or valuation. I asked quickly, what is the role of quantum computing? I don't know what it's going to say. Quantum computing represents the long-term end game for multi-agent optimization, and Railtown has proactively secured its footing here through its strategic licensing partnership with Quantum.IQ. As the token and agentic volume scaling targets hit massive global thresholds, classical silicon GPUs face physical processing and power efficiency walls. Quantum AI hybrids solve this bottleneck. Intelligent hybrid orchestration. Quantum computers are exceptionally efficient at solving combinational optimizational problems. Railtown's extended Conductor platform is being engineered to serve as the traffic director between classical GPUs and quantum processing units, QPUs. Algorithmic routing. Conductor will dynamically analyze an enterprise AI workload in real time. It will route standard text and data processing to classical chips, but immediately intercept and offload ultra-complex multi-agent routing configurations, cryptographic verification, or massive database optimization tasks to quantum hardware. future-proofing the stack by bridging the complexity gap between classical code structures and quantum systems. The sovereign stack ensures that whenever a nation state or a telecom provider upgrades their physical data center to quantum arrays, the software orchestration layer does not need to be rewritten from scratch. I'm just going to type in one word, rail engine. And see what it says. All I did is write rail engine. Rail engine is Railtown AI's proprietary real-time data ingestion, transformation, and universal retrieval platform designed to feed corporate data into AI models. Within Railtown's agentic ecosystem, it acts as the primary data parser and processor that prepares messy data for automated workflows. Core mechanics and capabilities. Universal ingestion. Rail engine functions as a centralized gateway that hooks into any external corporate data source, including legacy file, storage, ticket streams like ERA or DevOps, and live application database logs. Real-time data transformation. Once ingested, it runs multiple cleaning, structuring, and tokenization steps. It converts unorganized developer output and raw corporate logs into an aligned, unifiable database format. The foundation for RAG. By providing structured, clean data, Rail Engine acts as the optimal backend for retrieval augmented generation applications. This ensures an LLM receives accurate contextual data rather than hallucinating answers. How Rail Engine feeds the sovereign stack. When viewed through the lens of the TELUS Sovereign AI Factory or Uniserve Enterprise Cloud, Rail Engine serves a specific purpose in the architecture. It feeds the conductor layer. While Railtown's conductor acts as the high-level orchestration engine that instructs AI agents on what actions to take, Rail Engine is the engine room that supplies those agents with the data they need to execute. 2, fueling rail tracks. Developers use the Python SDK and libraries via rail tracks to pull data mapped by Rail Engine, building code-first agents that can reason and safely automate real enterprise workflows. Should an investor in Railtown be scared? That's going to be my last question. I wish I could save this chat, but I don't know how to. Yeah, it's exactly. Whether an investor in Railtown should be scared depends entirely on their risk tolerance and investment style. I agree with that. And if he can't stand it, just sell it. I think it'd be a huge mistake. I think as soon as the description of Railtown changes and the black on out on news just moves in the direction of a bit of this information, he's got a different price to count. If I recall, he has 10 or 20,000 shares, maybe sell half of it. But if he has 20,000 shares and he sells at 25 cents, he's scared about $5,000. So maybe it's his mortgage. Maybe it's a hot money trade. But that $5,000, if he can afford to stay in it, 10x is $2.50. That's less than Langchain is valued at. And in my opinion, it's only opinion. I can't promise it. I think that's an automatic revaluation to 10x. So he takes his $5,000 to $50,000. But from 250, I'm going to skip all the other layers, I believe. I think it's going to 25. That's 100x. So his $5,000 becomes 500,000. And I think he really gives up that upside because he doesn't know what he owns. And I hope that, even though I know I get all pissy and all that, but I hope he can watch this hour or so that I've spent answering his fear. And maybe that will inspire him either to challenge this set of conclusions or do some research. But maybe it'll convince him that the market for small cap stocks are controlled by hedge funds and automatic algorithmic sell programs that continue to reap and reap and reap and reap while investors weep. And CEOs think I'll put out a news announcement. None of it matters. None of it. Anything a CEO doesn't matter. The only thing matters is when institutions buy. But Railtown hasn't done a toxic financing. Railtown doesn't have any formulaic, backward-looking financing in place. Railtown, in fact, has all the capital it needs to go to revenue. And it's got pretty low burn rate, considering it's not Palo Alto burn rate. An investment in Railtown is not a safe blue chip stock play. I agree with that. But hey, people that were in IBM before it collapsed, people in Oracle are about to get a comeuppance. I don't know what happened to SpaceX today, but all those free to trade shares are hitting the market. I don't know. Blue chip isn't always where it's at either. But I think I agree with that. It's a high stakes, high reward, asymmetric tech bet. I agree with that. It features classic microcap vulnerabilities and that's the vulnerability. The main vulnerability is what's causing his fear. Alongside massive structural growth catalysts. But to offset his fear is there's no toxic financing. And there won't be. Why an investor might feel scared. What are the risks? 1, severe microcap volatility and liquidity risk. With a market cap hovering under 50 million, Railtown is heavily exposed to wild price swings. The stock trades on the Canadian Securities Exchange and the US OTCQB market, which inherently have low daily trading volumes. If bad macroeconomic news, that's the broader market, hits the tech sector, exiting a large position quickly without crashing the stock price can be difficult. That's true. That's the risk. We've experienced that risk. If we need our capital before the stock performs, the illiquidity is going to crush our account. So it's best to hold on instead of selling down here, but not everybody can wait. And the wait has been a long time. At least your friend hasn't had to wait. Number two risk, the execution and adoption chasm. While the technology stack, conductor, rail engine, and rail tax is highly advanced, Railtown is still fundamentally a pre-earnings growth vehicle. That's true, but I think we're going to start seeing that revenue. I agree with that. The company is in a race against time to convert its massive sovereign telecom pilots with TELUS and potentially with BCE Hive into hard recurring top-line cash flow before its capital reserves deplete. I think that's right. I don't know if I want to do it now, but I think we did an analysis of how long the capital would last that they have. And I think it was either to the end of the third quarter or to the end of the year if revenues don't come in. But my opinion, they're already revenue producing, and the revenues are about to solve the problem of ever needing finance again. But that's a risk. And then where would they get money? I can tell you one logical place: Mike Lazaridis. So number three risk, Railtown is building an enterprise orchestration layer. It's actually already built, but tech titans like Microsoft Azure, ServiceNow, and UiPath are spending billions to lock down the exact same enterprise customers. I agree with that. That is a risk, and that's the risk of Canada being slow. But there's room. There's room, and one of the distinctive factors is we just went through it. Canada has essentially codified that, at least as it relates to their sensitive industries and data, users can't use US hyperscalers. So there's at least a slice that is open territory for Railtown. And Railtown doesn't have to compete head on with the bigs. Railtown must successfully defend its niche, sovereign Canadian infrastructure. I take exception with that. I don't think that's going to be all Railtown is. But let's keep going. Before global software monopolies deploy localized workarounds. And that's possible. Look, time kills strategies, and I don't know why Canada has become a culture of lawyers cover your butt and committees and take your time. Okay, so here's why you might feel confident. And it's the asymmetric upside. What does asymmetric mean? It means your risk is 24 cents and your upside to go to an extreme is $240. That's asymmetric risk. On $5,000, you could have 50 grand, 500 grand, or 5 million. That's asymmetric. Could is the operative word. So number one, elite smart money validation. Retail investors often get scared by stock charts, but institutional tech founders look at the cap table. Railtown's private placements were heavily backed by BlackBerry co-founders Mike Lazaridis and Doug Fragan through Quantum Valley Investments. These are men who literally invented the global mobile enterprise security stack, and their financial backing is an incredibly high conviction validation of Railtown's core IP. Two, plugged into monopolistic distribution. It looks like that's the case. We got to find out. But the hardest part for any small tech company is acquiring customers. And put it this way, maybe what's happening is Railtown got hooked in with AIP, and then it got hooked in with TELUS, and then it got hooked in with the government. And maybe that the government is what's put the kibosh on talking. But that's where the funding and the opportunity is. And that's where the monopoly might be as it relates to Canada. Might be. The key word is might. Railtown has bypassed this by embedding its conductor platform directly into TELUS's sovereign AI factory powered by NVIDIA. Instead of hiring an expensive global sales team, Railtown software is actively positioned to be distributed through the sales pipelines of multi-billion-dollar telecom giants. Three, the reason to be confident, the toll booth scale potential. If their shift toward usage-based token and agent orchestration metrics takes hold, the financial upside is non-linear. They are positioned as the infrastructure agnostic Switzerland of Canadian AI, meaning they can clip a fee. They can clip a fee on computing traffic regarding whether a company uses TELUS, Bell, or Uniserv. The bottom line, and I agree, I haven't even begun to see what it says, but I think I'm going to agree for your friend. Your friend, I'll refer to him. Your friend should not invest in money in Railtown that you cannot afford to lose. Nor should you hold it if everyday market fluctuations keep you awake at night. That's a very basic entry point predicate for investing in the micro crap area. And I say that because 80-90% of it is all crap. But there's 5 to 10 to 15, maybe 20% that you can actually make a lot of money on. And if you're a day trader, if you're hot money and you have a hot hand, you can have these explosive returns. But most of the explosive returns you hear about afterward. And most of the people that say they made money, maybe not. And they always come to you with the successes after they happen, but not before. However, if your portfolio strategy allocates capital for high growth tech asymmetries, which is what I think our little ragtag group does, our little institution here, I think that describes us. If your strategy allocates capital for high growth tech asymmetries, if we call everything we've done technology, we've already allocated anywhere from 5 to 9 to 11 companies. Each of us have done it and lost our butts. But Railtown is that 12th one that I think is going to give us the asymmetric return that not only returns all the losses, but gives really attractive returns. You know, write home to mother about. Railtown represents a rare market setup, a tiny $50 million public vehicle sitting directly at the intersection of Hollywood and Vine, of NVIDIA bare metal computing, sovereign data laws, and elite tech billionaire backing. Strong treasury, currently Commercializing. Another bad use of the English language. I think it might be acceptable. Let's see what their runway is. All right, I got to take this call. Okay. So here's what I asked for your friend. I said, strong treasury, currently commercializing runway. Yes, Railtown is actively commercializing. I wouldn't use that word normally. Its platform and has heavily fortified its treasury to secure its financial runway. Recent corporate updates and financial actions confirm that the company has transitioned out of pure research and development into active sales execution. Do you hear that? It's not showing up yet, but the company has made the transition out of pure research and development into active sales execution. I'm not saying it. I asked a simple question. This is what Google is saying. So the treasury and capital infusion, Railtown has dramatically strengthened its balance sheet, pivoting from a low cash, micro cap profile to what management explicitly refers to as a sound treasury. The warrant tailwind. The company announced that the final expiration of its outstanding share purchase warrants resulted, I'm going to slightly round it up, in 3 million in gross proceeds Canadian, injected directly in the treasury. The billionaire backing. This warrant exercise follows a fully subscribed $3.4 million placement led directly by BlackBerry co-founders Mike Lazaridis and Doug Fragan. The financial position. Combined, these actions have brought in over $6.3 million in fresh cash or capital, completely altering the company's previous financial risk profile. Current commercialization strategy. Railtown has officially moved into sales-focused business operations. Instead of relying solely on organic software adoption, the company has deployed a dual-channel commercialization strategy. One, the enterprise telecom pipeline. By appointing Zaid Atufat Shamsi, our architect of the TELUS Sovereign AI Factory built on NVIDIA, to its advisory board, Railtown has strategically positioned its conductor platform as a critical middleware layer. This plugs the software directly into large-scale business-to-business data center rollouts. Two, the small and medium enterprise service-led land grab. Land grab, I like that. Railtown launched a national go-to-market strategy specifically targeting Canadian small and medium-sized enterprises, SMEs, which represents 98.2% of all Canadian businesses. The partnership. They engaged WSI, a premier global AI consulting network, to scale customer acquisition. That's a big thing. The budget. Management has committed a minimum budget of $500,000 for the remainder of the calendar year, specifically to fund demand generation, position marketing, and accelerate client onboarding. The cash runway, this is how it calculates it. The fresh injection of warrant and private placement capital dramatically extends the company's operational lifespan. The historical burn rate for the quarter ended March 31, Railtown reported a net loss of Canadian, let's leave the let's just use the number, reported a net loss of 1.42 million. That's the quarter ended March 31. This averages out to an operational cash burn rate of roughly 450,000 to 500,000 per month. So the projected runway, with over 6.3 million successfully secured via elite backers and warrant holders, Railtown's current cash runway comfortably spans 12 to 14 months at their current burn velocity. This financial cushion gives the sales and corporate development teams a crucial window to convert their high-profile sovereign AI partnerships into predictable top-line recurring revenue before requiring further dilutive capital raises. Can I share this chat or save it? Yes, you can share it or save it. Built-in share link. Look at the top or bottom of your current screen. Look for a share button or an export icon. Clicking this will generate a unique secure web lead. You can export to Google Docs or Gmail. Copy and paste. I'm not going to copy and paste. So where's the share? Oh, there it is. Share. So I'm going to send it to I don't know. I don't think my email works on this phone. So what can I do with it? More. I want more. All I want is more. Oh, can I message it to myself? Maybe I can do that. Messages, that's what I'll do. So I'll send it to myself. Talking to myself, 'cause nobody's home. I think it's actually talking to yourself, because nobody's home. All right, I did it. So anyway, Jason, I hope that your friend can ignore my sarcasm and learn something from that effort. That was an ad hoc, pretty much top to bottom analysis of where Railtown stands today and whether your friend should be scared. my bottom line is, if he is scared and he can't sleep at night and he may own too much, and if he's not willing to understand what he owns, he probably should sell it. But if he's going to go day trading or go listening to the latest, hot, it's going to squeeze, it's in a buying zone, kind of, I don't know what to call it, almost musical chairs investing, he'll lose his money. This is a chance, if he's had other experiences of losing money in these micro cap stocks, the junior markets. I really believe Railtown, and there's other stories out there. We're learning here. All of us are. I'm learning too. But we're learning how to value an investment top down. And once you determine the value per share, then you look at the stock price. But then you got to steel yourself to the fact that the markets, it doesn't matter if you have a good story. It doesn't matter if you're doing everything right. They're going to churn your shares until institutions buy. That's just a fact, because they're like the Terminator in that scene when he's going after Sarah Connor. Who's in charge? He's going to, undo her. It's what he does. It's all he does. And that's all these machines do. And they'll do it right up to the point that their feelers, their algorithms recognize a substantial bid. And it's not us. They'll back away if we all come in and maybe it runs like Finger. That's what I think is happening with Finger right now. As retail rushes in, but I don't know that, there's always, any analyst can be wrong. Analysis can be wrong. But as it runs, they just get out. They churn. Like in the case of Finger, they're basically making 100% on their trades. As retail run it up because, this is great news. And I think they'll keep the mood up for a while. But as they sell it to you at 30, 40, maybe it'll go to 40 cents, they're converting at the lowest VWAP at the time, up to the number of shares they're trying to get out of. I don't remember what that was. I think it's a few million shares. But they just book essentially 100% profit. They don't care. They're not driving the stock up because of the news. They're not driving the stock down because of the news. All they want is the liquidity, which is actually meant in dollar terms, so they can churn. And those machines just do it day in and day out for a fraction of a penny. Thousands, even hundreds of thousands of times a day. It's what they do. It's all they do. And so I think that announcement from Next Trip today was very good. It was dense. It had a lot in it, but it's not going to scare off the combines that just keep reaping. They just keep it's not going to scare them off. Those machines are going to see any buying as an opportunity to strip out money from retail, because they're not scared of retail. There's not enough there that they're going to back their box away. They're bid in the ask. They're just going to churn, and they're going to use the dark pools. Ken Griffin is going to internalize orders. In other words, front run, in my judgment. And so your friend has to understand that's just the mechanics of the market. But the discounted value at 25 cents compared to, I don't know, I think you can get targets in Railtown that are just sound preposterous. but just stick with $25. If he can focus on that, Railtown could be $25, maybe by year end, but maybe it's, maybe it's next March. And of course, the overall market, war, asteroids, the Doomsburg iceberg is coming in. There's a lot of things going on. And Doomsburg iceberg could change the financial markets. That would be a shock that would end everything. Banks and insurance companies would go broke. Manhattan, Virginia Beach, most of Miami would be underwater, and permanently. Not a hurricane it'd be permanent. And all that real estate, I know a lot of you would be happy because Trump would go broke, but it wouldn't be fun for the world. But anyway, absent any of those dramatic nightmares, if he can focus on what Railtown is set up and is executing and ignore what the server farms do to stocks with algorithms, without humans, without thinking, without reading, without studying, without examining anything. So the price isn't telling you anything about the fundamentals of Railtown. The price is only telling you that they've been winning for a year and a half, or people like them. Because there's been a news effing blockout. And it's Canada. How do you get young female attorneys to do anything quickly? You tell me. You tell me if you have a secret. And if you challenge them, you're being sexist and it's male whatever. But how does a whole generation get rewarded for existing rather than for performance? I don't get it. It was different. But today, hey, you're born without a penis. You must be great. Let's promote you. Promote. I'm sure it's a good idea. And I'm sure there's plenty of hardworking people that deserve it. But in general, I wonder if anyone's done a study of it, this modernism. For what, 5,000 years, human experience evolved into breaking down the workload among different people in a community or in a family or in an economy. But what, in the last 30 years, 20 years, it's been completely revolutionized. I actually think it's in the last 7 years. Every institution of higher learning, majority female, by a long shot. The law student classes and graduates, majority female. Medicals, majority female. The just population of college campuses, majority female. The judges and the new legal teams, majority female, are very close. Legislatures are approaching, I don't know if it's a majority, but they're approaching a big slug of female. And then the boardrooms, and of course the campaign to make sure all boards and CEOs are replaced by women. It's all this is, and it's not just women. It's it's the whole wokeism. But I wonder if anyone's done an economic study. Has the economy actually performed better with that regime, or was it performing better when the division of labor was the guy had to go grunt at the job, or maybe some guys benefited, and then the family had its own role? I don't know. I'm not trying to go back, but we divided labor collectively to have a better output. I wonder if there's a study that says we're better off when women do everything and women are marginalized, and men are marginalized. Can you imagine anything more marginalizing for a man's role in society than the um, media fascination and even glorification of this Bonnie Blue woman? And I'm not judging her. You can't judge women, can't judge them. But she booked a house, apparently, I guess in London. I don't know where it was, here. And without being crude, she filled it with men. 400 men or 440 men or something. And by the end of their nightly entertainment, I guess, but it was procedural. Everybody had a chance. She got pregnant. And it turned out that 4 of the men had whatever test they had, whatever DNA or the blood test or however they did it. So out of the 400 or 440, she could narrow it down that 4 of the men were the father. Well, what does that really do? That's just saying that men, there's no purpose for men. They're just, I don't know. Has anybody thought to study it? Are we better off as an economy with this wokeism, with this equality of outcome rather than equality of opportunity? I'm all for equality of opportunity. I'm even okay with the thumb on the scale helping, sort of the past. But I'm really against these young boys, young teenagers, young men. What did they ever do wrong? What the hell? Why is the whole society against them? They have to carry the burden of the so-called patriarchy? One of the misrepresentations is that the patriarchy held down women's right to vote. I'm going to get the timeline wrong, but in the United Kingdom, where this all started, men who weren't from the upper class didn't start getting the right to vote until 1831 or something like that. But prior to that, the only men that could vote were the very elite. And then in something like, it went up a bit in 1880 or something, but it was World War I, after men who didn't own property, that was the cutoff, men were slaughtered. Men, not women, men were slaughtered. That the rules got changed so that voting was expanded to men. And I still don't think it was all men, but the majority of men. But that was World War I. And women got the right to vote. The idea was before that you had one vote essentially, I guess, for one unit, and I'm not saying that's necessarily right. But women got the vote shortly thereafter. I don't know, 10, 20 years, 15 years thereafter. I don't know. But it wasn't very long afterward. But if you hear about it, it's this grand patriarchy that stole everything. It's unbelievable. But here we are with a world, and Canada is in the worst case, where we're in a world that can't get anything done. I don't know. Maybe that's not the reason why. Maybe it's the young men have no talent, and the men just sit at home and play video games while while the young women go out and they do everything better than the man could. I don't know. I guess this is not up to me. I've got to live in my washed up generation. But one of the problems with Railtown has been everything has gone very slowly on a regulatory and a legal basis. I don't know if I have the right reason at all. I could be totally wrong. Maybe it's all Corey's fault. And maybe if somebody else were running the company, it would do better. As I heard it, maybe it's all the AIP people are great and the Railtown people don't know what they're doing. That's what I heard sort of at the end of last year. Maybe that's right. I don't know. I think here we're paying a heavy price for. It's a hell of a price to pay for being stylish. So I don't know. Anyway, it's not a winning argument. I know that. It certainly is not a winning argument. I'm sorry to it doesn't matter. I don't want to be anti anything. It's just, I don't understand. I understand your friend is concerned. I just don't understand why we're waiting this long. But on the other hand, it happens. Things take time. Rome wasn't built in a day. And, you've got to be ready to, all you can do is adjudge the market, adjudge the company, come up with a valuation. And then the nightmare is you got to make it until the market gives you your valuation. And unless the story changes, what's your choice? You got to hold on. Unless you're a day trader. And it is frustrating. There's no question it's frustrating. And I'm sorry your friend is scared. I'm sorry he's scared.
We're told to be here at 9 o'clock. We have 50 officers out there to test.
For how many vacancies?
8. With 5 men and 3 women. Promoted to inspector out of this group.
3 women.
Do you object, Inspector?
Now, who might you be?
Oh, this is Ms. Gray of the mayor's staff. She's here to monitor these examinations. This is Inspector Callahan.
Oh, yes, I know something of Inspector Callahan. And I'd like to tell you, Inspector, it is the mayor's intention that this department be brought more into line with the mainstream of 20th century thought.
Just how does he figure to do that, Mrs. Gray?
Well, for one thing, His Honor intends to broaden the areas of participation for women in the police force.
That sounds very stylish.
I think he also said something about winnowing the Neanderthals out of the department.
Well, I guess we better get on with it. Next applicant. Officer Moore?
Yes, sir.
As you know, this is the final stage in your examination. It's a rather informal test in which we try to get some line on your ability to think on your feet, your reaction to stress and pressure, your ability to apply the law in a hypothetical situation, and so on. Okay?
Yes, sir.
How long have you been on the force?
9 years.
What department?
Mainly personnel and records.
personnel and records.
Yes, sir.
Harry?
Have you any questions for the applicant?
Questions? How fast do you run the 100?
Come on, Callahan. You know how this board functions.
All right, sorry. You know that if you make inspector under the mayor's new guidelines, that you might just be out riding in a police car?
Yes, sir. That's what I'm hoping for.
Well, Officer Moore, maybe you'll tell us all here about your most important felony arrest.
I've never made a felony arrest.
Well, maybe you'll tell us about your best misdemeanor arrest then.
I've never made a misdemeanor arrest either.
Then what the hell gives you the right to become an inspector when those men have been out there on the street for 10 or 15 years?
The woman's place is in the home. Is that what you're trying to say?
What do you think this is, some kind of encounter group? I want to know what Officer Moore is going to do when somebody points a gun at her and says, "Hit the deck, you son of a
You're
bitch!"
just deliberately trying to fail this candidate, aren't you, Callahan?
Well, if she fails out there, she gets her ass blown off.
It's my ass. And, my hard luck.
Except that out there, you're going to have a partner. And if you get blown away, he gets blown away with you. And that's a hell of a price to pay for being stylish.
Are you finished with the questioning, Callahan?
Hypothetical situation.
Well, it's a hell of a price to pay for being stylish. Anyway, Jason, let's leave my answer to your friend there, and let me go through the rest of this. I think I covered everything. All right, let me finish your thing. This was my response. Hey, it's going to work or it's not. It's going to $5 or $2.85 or $0. Hottest area of AI software, and the need is growing. Well, I think your assessment is right. I don't think it's going to $0, Jason. Why I don't think it's going to $0 is my opinion of Railtown, and it is opinion. I think they did revenues in the second quarter. I don't think it's going to be huge. But I don't think that pile, let's say it's $6 million. I don't know what the exact number is, but this AI said 6 million. I don't think it's going to be diminished by 2.5 million in the second quarter. I'm guessing that maybe it's only 2 million or something. But more importantly, Jason, I think that revenues are going to come in the third and fourth quarter. And I think I was looking at an oil company. I am looking at funding an oil company. And I went through, it took about yesterday, it took about an hour and a half, 2 hours talking to the guy going over the models. And he made a comment that really struck me. And I think it applies here too. But it's a little different because oil or gold, it's a matter of what reserves you have in the ground, but it's a similar idea. And I was all focused on cash flow. When is the investors' money coming back? When does it go cash flow positive? You know, the questions one would ask. And the numbers were brilliant. I mean, the numbers are amazing. I'm going through and where there's a buffer in there and how it's conservative. But we got to the end of, probably about 30 minutes of going over one chart. And he said to me, that's really not the right thing to worry about. And I thought, I mean, the numbers are beautiful, but that's not. He said, well, the thing that matters is once, this is for oil, but I think it applies here. Once the project is producing cash flow, yes, it matters how much cash you're getting and all that return on cash return on money invested. It all matters. But the key thing is you can then extrapolate what your reserves are, because you move from being a potential reserve, I guess. He didn't use the standard terminology. I forget what he said. But you go from, possible reserves or a theoretical resource. He used a different word. You go to proved producing. And so all of a sudden, all of that volumetric reserve in the ground goes from essentially kind of a speculation it's not speculation, but to the bank it is. It all of a sudden goes to, well, you're producing, these are your volumes, this is the flow rate, and a company, an engineering company, can give you the volumetrics, calculate what your reserves are in the ground, and all of a sudden you can do a model on what your assets worth. Well, it's the same thing, I think, with Railtown. It's not so much that they have reserves in the ground, but Railtown, if they're able this quarter that we're in, and then the fourth quarter, if they're able to start booking contracts, and it's not going to be, I don't think it's going to be huge revenue this year. It could, you could leave this year with more revenue than Langchain was projected to have, but I'm not sure it's going to be that much revenue this year. But it will be revenue, and it will be modelable. And I think what happens is the total addressable market, not the total market, what their company can address, which right now is theoretical, as soon as they start generating revenue, and as soon as they have contracts, and it's actually happening. Now, again, I think it's forward numbers, we don't have to wait. But as soon as it can be modeled, what happens then is arithmetic. I mean, the models might have some calculations in there that have deltas and betas and zetas and Catherine Zeta Jones. But the idea is the same. Right now, it's theoretical in a way. But once they start booking contracts and generating revenue, that you take, okay, they have this data center, tell us, and it looks like this is what they're capturing of the Canadian market, and we can model it for the next 3 years there. And now they bring on Bell, and we can model that, and then they can extrapolate that over 2 or 3 years. All of a sudden, all that sort of potential value becomes very real value, brought forward from the future to today with discounting, but using models that these institutions spend a lot of money on with real brain power. And yes, there's women doing it too, and they're very good. It takes a theoretical into a real valuation. So my point is, Jason, the revenues as they come in I think already there for the second quarter, but for the third and the fourth quarter, it may or may not bring the company cash flow positive. I think it will, but it may not. But what it sets up is a way to value the future projectable revenue, discount that to today, and worst case, the company's raising money at $10 or $15. anyway, that's one thing I think he would need to know. But I don't think it's going to zero. I can't really think of a scenario. I mean, it's possible. You're right to put it that way to him. But I don't see a scenario where it goes to zero. Now, could it have a spike of panic selling? And I don't even want to give you a target out loud because the boo birds will clip it and put it everywhere. But yes, any stock can go down in the short run from any price. Any stock can get really punished in 1 or 2 day move. And you could have a flush out of people, maybe like your friend, that go, I can't stand it anymore, and they just sell out. And that can be called, it used to be called anyway, capitulation. And everybody that was holding on is washed out, and the next day the stock starts its move upward, and for months and years. So it can happen, but that's trading. I just can't picture where Railtown goes to $0 in value. They have a strong treasury. They have, I think, deep pockets in two of their investors. And I would imagine those guys have warrants too. There are some warrants outstanding. Of course, it's at higher prices. But I just, Jason, they've got at least 5 sources of revenue. They've got the data center concept, which is massive. They've got the money to hire WSI and go after, as that thing said, sort of claim the beach, the land grab. In Canada, sort of one company at a time, and that's consulting, and then it's revenue if they sign up each company for the conductor platform. That's not about making that their business. That's about getting the developers comfortable with Railtown, and you never know when that catches fire. But then they also have whatever's going on with the government and digital. They had, I don't know, we don't know, but that could be another source. They have the AIP, that those 200 companies are already doing $500 million a year in revenue. Now that doesn't come to Railtown, but that's the attractive reason to roll up those companies. What if, and of course I'm speculating, but what if the government's going to provide funding via digital and via Dr. Tom Core to help proceed with that roll up? That's a lot of cash flow, because right now they can't issue shares at 25 cents to roll up. But maybe I'm speculating here, but maybe there's a plan for some funding to help that happen. That may or may not happen. They have another thing. They're going to use the Railtown platform, the conductor platform, across those 200 companies and all their end users. And oh, by the way, they're spending probably 250 million a year. I don't know the exact number on hyperscalers. We just found out the other day that there's 300 billion dedicated in the Canadian budget to subsidize bringing Canadian AI home. What if that's subsidized? That's a whole area of revenue that we haven't addressed. There's Uniserve, which is small, but it's a proof of concept. I mean, I just don't see how Harbison, this is a company that spent 2.5 years of heavy lift building rail engine. It spent 2.5 years of heavy lift or more building conductor. I don't know about rail tracks, because I think rail tracks kind of built itself, but they've created, and Railtown by its own building and usage builds its own moat. They've created something that for example, Cursor got purchased by SpaceX simply because it was faster to buy it than build it itself. There's an arms race going on. I really have a hard time seeing how this company goes to zero. I don't see it. I think if he thinks it's going to go to zero, and I don't mind you putting it that way to him, he just doesn't understand what he has. And in terms of your targets of $5, I think $5 is an initial price target. I think it can go to 285 too. I mean, the higher the number, you have to think a little longer term, and you got to think about the variables involved, and you got to think that the company might be purchased by somebody else, maybe at $50. I'm making it up. And then a lot of that growth will occur inside a bigger company, and you might only get, I don't know, 3x from $50 instead of the implied growth. So, I mean, there's a lot of variables. But look, it might not be the stock farmer. If he's scared, I don't think Railtown is going to I don't think Canada is going to do anything meaningful until the second week of September, if then. I think most of these attorneys and regulators and bankers are on vacation. And I think all of the people doling out the government money are on vacation. I think they're having committee meetings. They're covering it all up with memorandums and circling back and why don't we gather and let's all of that. So if he's going to drive himself crazy during August, he might as well get out of it, because I think the likelihood is nothing happens until after Labor Day. However, I don't want him to get out, because in August, Railtown could easily go to your $5 number. I'm not saying it will, but it could easily happen in 2 or 3 weeks. And it could happen in August. And it'd be a shame. It really would be a shame if he lost that opportunity. But only he can decide, Jason. Harbison. Only investable player in the space I'm aware of. I agree with you. I don't think there's another publicly traded company doing what Railtown does with a pure focus and at these valuations. Obviously, he can invest in Google. He can invest in Amazon. He can invest in Microsoft. He probably can invest now in SpaceX, and we could say they have this, a tool. He can invest he can try through his broker, if they'll take $5,000, he can invest in, a Leon Black fund or a Apollo fund, and maybe derivatively get into Langchain. Or he can invest in an ETF that claims to fund in this space. I'm sure come September, October, a lot of brokerage firms are going to have research, and they're going to raise money for the orchestration layer. And maybe he can get into an IPO, or maybe he can get into a mutual fund. And maybe that'll allow him to sleep better. But if he's looking for an asymmetric investment risk reward, here's the thing. He can lose 24 cents. But if it's all of his money, that's a different statement, isn't it? To say to somebody, you can lose all your, I'm not saying, look, if it's your speculative bucket and you say you can lose it all, that's different. But if the only thing he has in the world is this money, and you say to him, you can lose it all, that's pretty scary. Instead of, you can lose 24 cents, But I just using your previous number, and I think the higher the projection, the wider the variable, and the wider the uncertainty. But one example is you can lose 24 cents. You might make $240. Well, all things being equal, if you're given an investment risk reward like that, you're going to apply some money to it. But what I don't agree with, I don't think it's going to zero. I think the 24 cents is unbelievable that you can still buy the stock less expensively than you could a year ago, a year and a half ago. It's incredible to me. But I think that's the function of how rotten our markets are. I don't think that's a function of what the team has done and what the market is. And luckily, they did not take toxic financing, and they have enough money. Probably that's what I remember, to get through the end of the year. And I think by the end of the year, you could see cash flow positive. But even if you don't, using my last analogy, just the fact of revenue, the fact of contracts, the definitiveness of them is going to allow economic models that project future revenues, bring that forward, and give us higher prices. Again, assuming that the creeks don't rise. It has Sovereign AI, that's true. It has the BlackBerry guys. It has John Ruffalo. It has AIP. It doesn't have any revenue yet. I don't know about that. I think it does have some revenue, but you're right. We're not aware of it yet, and I'm comfortable. Well, I think you answered it very well, Harbison. Ward Richardson, the Canadian federal government officially paired Cyber Defense AI Inc. and Wiser AI Systems together. Wow, that's big. That's defense. And just Ward's kind of going on about this. The founder and I suppose CEO of Wiser AI is on the board at Railtown. Cyber Defense AI Inc. and Wiser AI Systems. That's amazing. This year. That's amazing. User, YouTube, Jim. Hi. Hello, William and all. I put in a bid for Railtown 1800s and got 167. Hopefully the rest buys today, but it doesn't look good. I always give the same advice. I would just buy it. Because literally, even though for all the negativity I'm cautioning about August, literally tonight something could happen in Vancouver, and tomorrow morning that stock could open at 60 cents. So I would just buy it. But you're trying to save 1 or 2 pennies. I don't really think that's going to be the issue in the future. I think the issue in the future is going to be able to buy volume at all. Railtown could go to a situation where you can't even buy 1,800 shares. It trades at 100 shares at a time. I don't know. It depends if the high frequency trading is still in there. But I think it'll disappear, or it could disappear. That's how stocks used to trade back in the day. You could have a stock that you built a position in, and then there's news or pre-news, all of a sudden it's running, and you might not be able to buy 100 shares before it got away from you. I don't know if that'll happen here, but it used to happen. But good for you that you bought more and you've got a bid in there. Ward Richardson, the Trade Commissioner's Service of Canada selected them as the core members of Canada's National Cybersecurity Accelerator. Wow. Deploying them side by side to handle sovereign critical Ward Richardson, infrastructure defense. The March 2nd deploying focuses on securing critical infrastructure and 5G telecommunication networks within the North American financial and municipal sectors. That's big. Financial. They want to make sure that Kenny Griffin can enter his orders without them being intercepted. No, I don't know. That's actually really big, and that was March, and now we're August. Again, I think it's vacation. This could really whiz bang bing in the fall. That's great information. Donna M. Hello everyone. Hi Donna. KYP. Hey KYP. Hey my Billy. KYP. PYT. Ward Richardson, what I'm seeing here, everyone, is looking at AI apps, but they're looking at the wrong thing. The real story right now is a disruptive software gang that's forming in the infrastructure layer. So Ward is seeing a disruptive software gang that is forming in the infrastructure layer. Ward is saying you have RT, and now you have this aggressive wave of other disruptive companies joining forces with RT. They aren't just building software, they are building or forming a disruptive alliance to completely, the Ward Richardson, dismantle the multi-trillion-dollar legacy software industry from the inside out. That's very powerful, Ward. That's very powerful. They aren't just building software. They are forming a disruptive alliance to completely dismantle the multi-trillion-dollar legacy software industry from the inside out. That's amazing. And I agree with you. But I think that's really well said. And it gets to the heart of what's going on, Ward. The legacy software industry, unless everyone goes away and goes back, is everything written, everything built on SDKs has to be built on ADKs and updated on software built on ADKs. And it's multi-trillion dollars. Multi-trillion dollars. And then when it's running, the biggest risk to getting enterprises or governments or defense contractors to use AI, the three things that apparently are on their list: cost and safety/security and redundancy. Obviously, they got a better cost right now, maybe, on the majors. They get security and safety on the majors, or they think they do, and redundancy they get with the majors. So you got to answer all those things. But Railtown is the key to that. Conductor is the key, and the whole platform is the key to that. I also think it's just confidence, a sense that it's reliable. But Railtown is the answer for that. And so were others. So were others. But when you realize that the rest of the world does not want to be subject to the U.S. Cloud Act, at least until the attorneys and to the clever engineers come up with a way for Microsoft to run a data center as a sovereign data center and everybody trusts it. Until then, Railtown's got an open path, at least in that sliver. But I don't think Railtown's only business is this sovereign business. And I still stand on that Railtown's software and its platform is best in class. And that's something we have to find out. You have to find out. Gandalf, I don't have time for this. It's 8 o'clock. Damn it. Gandalf, why don't you go to someone's audience like Tolstoy King or the guy on Discord, and why don't you spread your charms there? You don't need to be here. You don't own the stock. You're not doing due diligence. So I don't understand the point. I will answer these next two questions, but if the whole tone is negative and it's FUD, don't be surprised if I ignore you for the rest of the channel, the live. All right, so here's Gandalf, who's probably a woman. 2 days ago, you sawed that in 6 to 9 months, your minimum price I didn't say that. I did not say that. That's not what I said. I said I do have a target of $25. I didn't say it's my minimum. Look, are you an adult? Have you invested a long time? Do you understand that projections and calls can be wrong, but the on timing, but the call on the investment can be correct? And if I said something like that, you know, I talk for 3 or 4. I don't erase anything, and I didn't mean it that locked in stone. My minimum target is 25. Anything could happen. If the stock market collapses by 90%, it may not make $25. So anyway, 2 days ago, you saw that in 6 to 9 months, your minimum price target is $25. 6 to 9 months. So that would be second quarter next year. Sure. I think it can be $25, sure. But it might be 55. It might be 100. On the other hand, if we're waiting on attorneys or regulators or Mark Carney in Canada, it could be 2029. I hope you're right on that, but your track record in terms of price and time doesn't make me hopeful, to be honest. Well, I'm glad you're an honest man, and I'm glad you shared your opinion. I am the first to admit that my projections and urgencies have not panned out. I didn't make them up. And I'm trying to give you the whole parameter. And if you can't make your own decision and your own projections, don't listen to mine. What's your point? That I'm wrong on my projection, therefore Railtown isn't a disruptive technology? Therefore Railtown isn't the Canadian orchestration layer in a country that is focusing, by my count, $3 billion and all of their brain power on creating a Canadian-based ecosystem, soup to nuts. Everything's Canadian. Because my timing is wrong, that's going to change? Come on. I don't think you're particularly smart. I was going to say you're smarter than that. But I think you're an adult. What's your point? That I can't call the time or the price, therefore Railtown sucks? I think that's a non sequitur. Anyway, I'm going to move on. Gandalf, you also keep saying that Railtown just needs to update its description. Again, you're stating it differently than I said it. It appears to me that Railtown cannot update its description. They are changing how they put out their press releases, but it looks like what's on the Yahoo site, what's on the over-the-counter site, what's on Market Watch are printed there on some sort of service. I don't know how it works, but it doesn't look like Railtown can change that. It doesn't look that way. Otherwise, why would they leave it there? What it does seem to me, again, my absolutely stubborn, dim-witted friend, Railtown has been in a year and a half of news blackout. I think it might be, it's just a supposition. I think it might be that Railtown can't proactively go try to change things while that's going on. I don't know. They've got attorneys. They're very careful. But on the press releases, Railtown is changing its description. When does that change get reflected on what the computers see? I don't know, Gandalf. Are you suggesting to me that the screeners on Wall Street are not computerized? Are you suggesting that they go through thousands of the companies and look for orchestration layer to find a gem? Or is that what you're suggesting to me? You keep saying RT just need to update its description on stock and broker websites and the stock price will go up. That's actually not what I said. I said it will appear it will be revalued. It will appear in a different bucket. Right now, RT Railtown shows up in the standard software as a solution envelope. There's probably 6,000 of these startup companies that have a software solution, and it's for developers. They're a dime a dozen. And currently, I wouldn't think any institution on Wall Street wants to invest in a software as a solution startup and who's on the over the counter and is under $1. I don't think there's any interest. And sure enough, I don't think the screeners are picking up on Railtown. What I'm suggesting to you is that as soon as Railtown moves, the screeners pick up orchestration, agentic layer, or whatever the magic word is, all of a sudden that's a very small universe. Maybe it might be 6, might be 3, might be 2, might be 1 company that's publicly available to look at. Well, then that story comes up to the institutional desk. It goes to the research analyst, and she's going to do her hard job of drilling down what is this thing. She's going to make her phone calls, and she's also going to put a model on it. That's what I'm saying. What I think makes the stock price in Railtown go up is very simple: institutional buying. Until there's institutional buying, I think the computerized selling continues. So that's my point. I can't predict when institutions start buying, but I think they have to see it first. I think their screeners have to see the stock first before they even study it. That's my point. I really would appreciate, whether you're putting words in my mouth or you're just trying to get part of the context, I wish you could use your brain. Couldn't you just contact Corey and get this done? Seems to be an easy fix. Well, I think it does seem to be something Corey would do, but I don't think Corey needs to be bothered by me. You don't think he thinks about it? My guess is, again, he's not able to, maybe because of this blackout period. My other guess is that that's not how it works. Those sort of they're supposedly independent sites They do it themselves and they get the description somewhere else that's supposedly independent, probably run by these guys. I think he's doing what he can do, which is change the public announcements. And I don't think Corey has ever spent a minute trying to pump up his stock. And I don't think he should. He should work on his company. And you should associate yourself with CEOs that focus on what really matters, proving revenue, proving the value of their assets. Hi, Jim. Only got 167 today, bought out of 180. That's a good number, Jim. I hope you get the rest of it tomorrow. That's great, Jim. I think that's a great number. Um, you know my advice. I would just buy it. I mean, you're what are you bidding? 3 cents? 2 cents? I would just buy it. Why are you here? Gandalf, still no Form 7, by the way. I don't think they have to file it again. The Canadian Stock Exchange is actually changing that rule, or they're in the process of it. I don't know if it's been approved. But again, my thick-headed, dim-witted friend, Railtown was allowed to list on the Canadian Stock Exchange, and it was a pre-revenue startup company, and I think it was on a watch, but I think a bunch of boxes got checked, like institutional ownership. Well, you know, these guys from BlackBerry, that it's no longer R&D. It's no longer pre-revenue. Now, we don't know that for sure, but that's the evidence out there. And that it's in the commercialization phase, and that its treasury is strong and it has no debt. I think it's no longer under, for lack of a better word, watch. And I don't think it has to file a Form 7, by the way. And so you can keep bringing it up, but I don't think there's going to be another Form 7 filed. I think what we're going to see next is the August 26 earnings. And then you can feast on it to your heart's content. But it's not a signal of trouble. It's not a signal that the company is hiding anything. It's not a signal that there's fraud going on. The fact that the Form 7 isn't filed is meaningless. 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 Still no Form 7, by the way. July deadline expires this weekend. Okay, fine. Has anyone any idea why that is? Other than they are in a different category and no longer need to submit? Sounds implausible to me. Well, I don't think your ability to process information is particularly impressive. Is Pluto a planet? Do you think Railtown brings excitement via the orchestration level? Would you call it the Mozart or the Beethoven of AI integrators? I don't know what you mean by an integrator. And I don't have a broad knowledge of, I like classical music. I don't have an in-depth knowledge, but off the top of my head, I think Mozart and Beethoven are two different things. And I think they're probably equally genius. But if I were forced to pick one, I don't know. I guess in this moment, I would pick Mozart. Ward Richardson, I love it. Gandalf, your posts are just shit at its best. I highly recommend you do some due diligence that so that you're not making an ass of yourself. I agree with that, Ward. Bravo. I don't know. I don't think Gandalf owns any shares, and I think she shows a particular lack of understanding of the investment, and she gets lost in minutia that absolutely has nothing to do with the value of the market or the value of the opportunity. But you know, she's she's stuck with a very limited intelligence and a very limited ability to process information. Harbison, on June 4, 2026, the CSE, thank you, Jason, published proposed amendments to its listing policies that would completely eliminate the requirement for listed issuers to file this report on a monthly basis. That was June 4th, and that was Form 7. Beyond that, what I understand is separately, uh, and I can't prove it because I don't have it in writing, but I was told that Railtown is exempt from that filing requirement. And it's because they've improved. Whatever the improvement is, it's a boxes you check. So I don't know. I don't think it's a big issue. Gandalf, Ward Richardson, would you be able to answer the questions? These questions came up because I have done my due diligence. All right. Ward Richardson, Harbison, I read that Canada eliminated the Form 7. I think May was the last month for Form 7. Okay, so it's actually in effect. Gandalf, Harbison, it's a proposal and it has not entered into force. Railtown is not exempt from the filing. Are you making that up? How do you know that? How do you know that? That it's not exempt? You might be right, but how do you know it? I was told they no longer have to file it. So you have your opinion. My highly intelligent source has theirs. And what's your point anyway? Are they going to file another Form 7 that says, we worked on rail engine, we updated a conductor, we have 3 employees doing this and 1 doing that. We reached out to, some conference signed by Paul Woodward. It doesn't say anything anyway. What's your point? Gandalf, Ward Richardson, where did you get that from? Is that your way of doing DD? If that, so that nothing surprises me anymore. Stop picking, don't pick on Ward. Ward is actually one of the strongest analytical minds here, and he's put a lot of work into this specific company, but also into AI in general. And he has done hours, if not days, if not weeks, if not, frankly, years of hard work on his due diligence. So I think you're wrong. Ward Richardson, Gandalf, I can clearly see you did not do any due diligence whatsoever. If you had done your due diligence properly, you wouldn't be asking these silly questions. If you want to understand what is going on here with Railtown, go back and listen to all of the live broadcasts for the last 12 months. All the info is there. I have to agree with that. I never erase anything. I never edit anything because I don't know how to. And we have gone, not me alone, everybody here as a group, we have gone ploddingly in the risks, in the depth. We've grown in our knowledge. We've done it. We've done it. Oh, God. Why does it matter, this Form D? What's his question? Um, has Canada eliminated the requirement for filing Form 7? Let's see what it says. Yes. Yes, you do great. You absolutely do great due diligence. Yes, the Canadian Securities Exchange officially removed the requirement for listed issuers to file the monthly progress report Form 7. Gandalf, that's Google. You wanted proof. You obviously do a lot of due diligence. Here's Google. Yes, the Canadian Securities Exchange officially removed the requirement for listed issuers to file the monthly progress report, Form 7, repealing the form in its entirety effective July 31. So what's your due diligence? You're seeing they're coming up on a deadline in August? I just typed it into Google. Details of the elimination. Action taken. The CSE eliminated all references to Form 7 from its listing policies and stopped the monthly filing requirement. You want to see it? You want to see it? You see my question? You know, that was really hard for me to do. And then there's the answer. Reasoning: the exchange determined that Form 7 contained redundant periodic information that was already publicly disclosed through news releases and continuous disclosure filings on SEDAR. Ongoing rule: while the monthly Form 7 is gone, all standard, timely, and event-specific continuous disclosure obligations for listed companies remain fully in place. I see you do your due diligence. Harbison: no, they are no longer required to file it. The Canadian, there you go, Harbison. The Canadian Securities Exchange officially approved the amendments, and they went into effect immediately, July 31, which I assumed, since that was July, it counted July and August. Ward Richardson, okay, I already read that. Harbison, let me Google that for you. CSE Notice 2026-010. Let me see if they pointed that out here. T. Alex, you're great. One, publicly companies, CSE listed. If your company is publicly traded on the Canadian Securities Exchange, The monthly Form 7 progress report has been eliminated. T. Alex, the change. The CSE proposed amendments to completely remove the time-sensitive monthly Form 7 filing requirement from its listing policies. T. Alex, the reason: the exchange recognized the report as a redundant administrative burden. Most material corporate updates are already made available instantly to investors via continuous disclosure avenues. Gandalf, Ward Richardson, Harbison, T. Alex, you are right. Point for you. Gandalf, I knew it had been proposed, but not that it had been decided upon at the end of July. Because you do your due diligence. I see. You do your due diligence. Ward Richardson, T. Alex, thank you for clarifying that. I hope I never have to hear about the darn Form 7 ever again. Rail town strong. T. Alex, thumbs up. Ward Richardson, Kuda guy, well done. By the way, keep buying this. This is a once in a lifetime opportunity here. Ward Richardson, bold statement. Well, it's a bold statement for a one-eyed fat man.
Farrell, you and your brother stand clear. I got no interest in you today. Stand clear and you won't get hurt. What's your intention? You think 1 on 4 is a dog fall? I mean to kill you in 1 minute, Ned. Or see you hanged in Fort Smith at Judge Parker's convenience. Which will it be? I call it bold talk for a one-eyed fat man. Fill your hand, you son of a bitch!
I'd say that's bold talk. Gandalf, proof of product market fit would be good to see. Guys, Gandalf is a basher. Gandalf, I think, is a woman. But this is what they do. They just want to create the little worm that goes into your brain and causes doubt. It's all just standard stuff. Just say anything, question back, due diligence, misquote, cause doubt, cause fear, uncertainty, and doubt. And she's an idiot. Proof of product market fit would be good to see. Well, it's out there. Have you read? Have you bothered to do any reading of any press releases, any videos? Have you gone to the websites and looked at the product? I mean, it's just a nonsense statement. Why don't you fit the product where the sun doesn't shine? Lang Chain is well known, has large customers and growing revenue. Wow. Wow. Yeah. Lang Chain is well known. Yeah. But I can't invest in it. I'm not allowed to invest in it. It has large customers. Yeah. Does it really? And it has growing revenue. Wow. So I can't invest in it. So what's the relevance? Railtown has large potential customers, brand name. TELUS, potentially BCE. What's better than that? We just haven't heard about it yet. Why don't you wait till you hear about it? You can buy the stock at $15. Gandalf, not comparable with RT in the current status. Well, that's nonsense. That's absolute nonsense. When you buy your home, have you ever bought a home, or did your husband do it for you? And then you divorced him because you're so intolerable. When you bought your home, did you just take the seller's word for it, or did you look at comparables? Did you look at comps? Langchain is a comp, and it's a really important comp. T. Alex, Gandalf, you're not real. You end with a V8 block. V8T because I'm driving a V8. Lots of laughs. It's funny. Lots of laughs. There were a lot of V8T the other day, all driving V8s. T. Alex. T. Alex, the partnership between Railtown AI Technologies and AI Partnerships Corp evolved into a full corporate acquisition where Railtown AI acquired 100% of AIP. That's correct. Gandalf, I choose V8T because Gandalf alone was already taken, believe it or not. Yeah, that's too bad that you couldn't get that name. T. Alex, originally starting as an affiliate collaboration in late 2024, the companies finalized a three-cornered amalgamation on November 26, 2025, turning AIP into a wholly owned subsidiary. What was the date again? November 26, that's right, of Railtown. T. Alex, key strategic goals. Building an AI marketplace. Railtown combined its core technologies with AIP's asset to build a first of its kind artificial intelligence affiliate marketplace. T. Alex, the united entity aims to boost revenue by scaling SaaS enterprise solutions across international markets. And the key thing there is it is still software as a service solutions, but it's AI. It's AI. It's AI. What each side brings to the table, the company brings core contribution is strategic benefit Railtown AI proprietary. Okay, so the core thing Railtown brings is its AI proprietary AI platforms, Conductor, which is observability, Rail Engine, data ingestion, and Rail Tracks, agent build. Yeah, it's the agent build. I don't see the rest of it. T. Alex, just a reminder on history. There's so much going on. I agree. And as long as guys like Gandalf or girls like Gandalf try to get you into motions, then you get scared like Jason's friend, and that's why I get worked up. It's not. I don't know. I just get tired of people robbing your money and playing with your mind because Gandalf's goal is a short-term goal to get you to get out of your stock. There isn't stock that these guys can exit with. There's no liquidity that in that sense. Ward Richardson, T. Alex, when RT when RT bought AIP, they bought their own enterprise ecosystem, and it's still growing. Exactly what that's exactly what SoundHound AI did when they bought Amelia AI, and that was a huge win for SoundHound. See, it's amazing the research and the due diligence. That is a great comparison. Derek DeMuzio, do you think AIP deal was easy? 180 plus companies involved. If I said that, I shouldn't have. I agree with you, Derek. Um, I have this thing moving around in my eye. It's very distracting and it's concerning. Uh, you're absolutely right. I think it was difficult. Um, what I think was difficult about it, Derek, when I think about it seriously, is you had to get signatures, and we talked about it. You had to get, it wasn't 180 companies at that time, it was probably 163, but it's the same thing. You had to get signatures from every CEO, probably shareholder votes. And then I think Dr. Core had originally tried to list AIP partners, and I think he had gone out and gotten um, some investors because you need a certain amount of shareholders to do that. And I can't remember, it wasn't a lot of investors, like 125 or 175, and it wasn't a lot of money. But I bet he had to go out and get all those signatures, make all those phone calls. So I think I'm probably unfair to say it would be easy. I think it probably was a lot of work. And that it took uh, essentially 10 months. I don't know. I'm not sure it needed to take 10 months, but it did. It did. Um, at the end of the day, back then, I thought it was very important for the stock. But I think, Derek, looking back on it, somewhere in there, the TELUS arrangement with Railtown probably equally blocked news. So I don't know when they were introduced to TELUS, but let's say it was September. So, or maybe even August, but let's say it was September, and they probably had the framework for an agreement going on. At some point, the I can't use the word quiet period. At some point, the news blockage probably got paralleled with TELUS, so it then became irrelevant when the AIP deal got done. I think as long as um, a news blackout goes on, which in my judgment it's a condition that has existed since February 11th, approximately last year, whether it's the AIP or TELUS or the government. Remember, the government committee met, was it the committee of 28, and they met in November? I think there's a lot of things leading to this news or information or promotional blackout. I've never seen anything like it, and I express a lot of frustration, and I'm probably out of line when I do, but it is frustrating because it leads to the punishment that shareholders experience. My further point on it is it looks like Corey and Marwan, I have no evidence, no one told me this, but it looks like Corey and his team had carefully planned to start their commercialization. For number one, they changed from a sort of non-sequential reporting company. They changed to a calendar year reporting company this year. They really finished the rail engine and conductor in January, February this year. They clearly brought on and enhanced their board in the first quarter this year. I think, cleaned up their cap table with the warrant exercises in the essentially first 2 quarters of this year. I think they have strengthened, which we don't see, but I would imagine they have strengthened their, uh, 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 for lack of a better word, their licensing channel. But we haven't seen that, and that's a presumption on my part. But then I think he really timed brilliantly that he would hire Weiser or Wiesel or WSI for July. And he timed 2 news announcements that I think were said a lot more than people give credit for. Why? Because whenever news comes out, the grinding goes on, and people say, well, news is out, the stock didn't go up, so it must be bad news, because everyone has a TikTok attention span. But I think in those data, the data in those press releases had a lot of significant information. The biggest one is the company is commercial now. And hiring WSI that has a 30, 60, 90-day cycle to sign up, that times September, October, November. I think it's brilliant. I think it is brilliant. And it may time, the other thing that was going on is, if you believe that the government funding is important here, and I do believe that, because that's Dr. Tom Core, that's digital, that they signed up last year, and the people involved are the big players in Canada. I think he designed it so the CSIP deadline was June 1. And of course, he can't talk about anything. And the deadline is different than the awarding. So how long does it take committees in Canada to go through all that? I'm sure it's hard work, and you got to take a break, and you're going to have your vacation. So I bet it's going to be September. But I think it's brilliant. He's got everything lined up to have an incredible commercialization, incredible rollout of revenue announcements, I believe, starting in September. But they could come in August. But the bottom line of what I'm trying to say is that I did have a lot of that same tension that they've got to get this done. And I called it back then a quiet period. But I think it really was moot, because then TELUS came in, and then the government came in. And I think the combination of TELUS, the Canadian government program, and the for a while, AIP, it all sort of coalesced around creating news blockout. And I don't think they're out of it yet. I think that it's plausible, Derek, that that news blockout or blackout involves non-competes or NDAs or confidentiality agreements. And if so, people or institutions who sign those things are going to have to get at least a verbal release from the company, or get their own counsel to say, Railtown just announced that, I'm going to make it up, that McDonald's in Canada signed up Conductor as their platform for their drive-through and their fast food order system. I made it up, obviously. But if there were an NDA around that contract, as soon as it's announced, that specific slice of the blackout gets removed. But we have a lot of information. I think Corey has provided a lot of information. But the fact we're all, not us specifically, but the fact that the market has been full of spoiled brats, that you got to see news that's got to make the stock price. We're not going to read it. We're just going to say news came out, stock went down, it's bad. We're not allowing for the fact that every time news comes out, they just reap retail liquidity. And it's all short term. It's all nanoseconds or days or a few hours. And it's all done in the shadows. We know that. But it's still our attention span is news. It's not up. I would tell any CEO and any president and any IR person for any company that if they tell people that news is coming out and then those people believe that's going to make the stock go up, I just don't see it in these waters. However, each piece of news releases information, and if people study it, there is meaningful data there that can help form an opinion of a company. But the only thing, and this is something that I've come to through due diligence, I think as recently as 3 or 4 weeks ago, the only thing that is going to cause these stocks to get out of this hellish existence is institutional buying. It's not going to happen with a news story. Institutional buying is not going to happen with a press release. It's just not. And in the case of Railtown, institutions have to know it exists. But what could happen now that enough time has gone by and Corey did put out that press release that did have a lot of information on it and did draw in the line his ability maybe to talk to new institutions, maybe. What can change is if a new press release comes out, it can end the prohibition or the NDA or the whatever they signed, confidentiality agreement. It can allow some of those institutions, if that was the news that the NDA was predicated on, it may allow them to start looking into it. So it's progress, but it's going to be incremental. But anyway, I agree with you. It probably wasn't easy, Derek. T. Alex, good job, Ward. T. Alex. RT is already in other countries. Ward Richardson. T. Alex, I like your post on the reminder. You're not kidding. Now imagine what is going on behind a lot of closed doors in this industry. I think that's another good point. You know, we feel like if we see it, then the stock moves, or then institutions or other people see it. I'm not sure that's true in the case of Railtown. I think there's a lot of knowledge. I heard, and I don't know how to give it to you as factual because I can't. But I heard there that both in Canada, United States, and even worldwide, there is a lot of awareness of Railtown and of Conductor. A lot of awareness. It's just not out in the press, and it's not out in research reports. But I think it's what Ward is referring to. Imagine what's being talked about behind the scenes in this AI industry. And I think despite what AI finds, that Lang chain has all this acceptance, which has happened, I don't think the search engines are finding the fact that Railtown and Conductor and its various things are gaining traction. And word of mouth is spreading. And I think it has a lot to do, frankly, with the fact that Zaid Atufat Shamsi, who built the first AI data factory stack in Canada with NVIDIA. You don't think people talk to NVIDIA with, we don't know what large language model, but they have that Fire IX thing, and they have HPE as well. You don't think people talk there? You don't think people in the industry at conferences or friends pick up the phone and talk to Zaid Atufat? Hey, we're building a data center out in Prince Edward Island. How are you guys doing it? Well, hey, this is where we're doing it. You don't think that discussions happen at the committee that met in November, or at meetings of the AI for All, or at the digital company that goes for funding? Or with John Ruffalo talking amongst his people, or with Mike Nobrega, not saying things that are protected by the prohibition, but they can talk in general. You don't think the conferences they go to, you don't think Dr. Tom Core's constant reposting of, which is legal by the way, of Bell Canada, you don't think Dr. Tom Core's extensive Rolodex and contacts, you don't think this is starting to cause a word of mouth, or I don't want to say viral, but an awareness of Railtown? I think you're missing it. If you think you have to see it in some sort of PR piece or promotional piece before you think that's going on, I agree with Ward 100%. Imagine what is going on behind a lot of closed doors in this industry. And I would add to that, I would say that behind closed doors and in the people to know, particularly in Canada, but I would extend it to Germany because of Canada's link. I might extend it into parts of Europe. Maybe, I think almost certainly you can extend it into the United States. They know about Railtown. They know about Railtown. Ward Richardson, T. Alex, they say 13 countries when they first bought them. I have a hunch that number is higher. What I'd like to know, who are the last 38 companies that joined? And we know the last two. Ward Richardson. It will be really a fun ride with this company for the next few years. And I think that's going to be the approach, especially when I found out what was going on this week with Wiser AI and Cyber Defense AI. When the gate opens, we are going to hit the ground running. I think that's brilliant, you guys. I think that's brilliant. That's a great conversation. T. Alex, this company is very exciting to say the least, to say the least, Ward. Even the Canadian government is a big investor. Think of all the Canadian employee unions and Canadian hedge funds buying. They haven't been able to yet. But what's interesting about that, T. Alex, which is counterintuitive, and this is the amazing thing about what you all have done. As the stock price of Railtown goes up, it's going to cross some minimum thresholds. And those Canadian employee unions and those Canadian retirement plans and the Canadian hedge funds who will be able to buy, a lot of them may not be able to buy below $5 or even $7 or $10. As it goes up, their commitments come in at higher prices. And so uniquely, you all have been able to build a position in size at low prices. It's counterintuitive. I think it's going to be very hard to buy size in this stock, at least until it reaches a higher equilibrium. And that's assuming you had the money to be able to afford it. it's an interesting dynamic. T. Alex, they will not miss out on the government investment. I agree with you. Dr. Tom Ward, the digital company, and Atufat Shamsi, I think, is got to be on some of the government's Rolodex. But I also think Mark Carney, although some people say he's ineffective, I don't know. But he comes from Brookfield. What is it called? Brookfield Financial, sort of the Canadian BlackRock. Who is financing the data centers that Hive Digital is doing? I don't know. They did a zero coupon. I'd like to get some depth on that. But Brookfield is Canadian. So imagine, you can't imagine that Brookfield is not in the corridors of power. Mark Carney is the prime minister. You cannot imagine that Brookfield isn't part of the 2 billion, the 300 million, the 700 billion, the 300 billion, sorry, that Mark Carney hasn't included Brookfield in those parameters. What if Brookfield's funding? I haven't heard that, by the way. It's a connection I'm making. But what if Brookfield is funding Bell Canada data centers? Not so much that brings new money to our story right now, but what if there's a filing that states all that? Railtown doesn't have to be mentioned, but to get those data centers up and running, they've announced every part of it except the orchestration layer. In Canada, the hedge funds and the retirement funds and you're right, the employee unions, owners, they're going to look in there. They're all going to know that it's Railtown. They're going to know the revenue models. They may even know what the revenue split is. They're going to know that Canada is making this campaign. Why is Canada doing it? They want to be one. I think I read it somewhere. It comes to my head quickly. They want to be one of the top 3 AI powers in the world. I don't know if that's achievable, but they've got the energy, they've got the cold air, and they've got the government doing it. And they can turn energy, the analogy I would use, I don't know what natural gas is trading for up there, but they can turn $1.50, $2 an MCF natural gas into $20 an MCF natural gas by funneling it through power and the data centers and keeping AI in country. They can keep all that economic benefit there. And I think Canada is dead serious about doing it. So I agree with you. I don't think Railtown's going to miss out. I don't think the partnership's going to miss out. But what would be amazing, and I've never heard about anything about it. What would be amazing is if Railtown is in line for some government funding or some government backing or some sort of government coalition, like Ward has pointed out, building this alliance. Yes, I think they will not miss out on government funding. Ward Richardson, I strongly agree with you. T. Alex. Chris LaCroisier. Hey, Chris, how are you? Oh, my God, Bill, block Gandalf. You're doing what he wants you to do, upsetting you. That's his objective, to distract and distort. That's it. That's actually a good, thank you for telling me that. I'm subject to the same human emotions and reactions, and add to it that I have the Irish. I think it's attributable. I think other nationalities have it too, but I certainly have that aspect where blood rushes. I can get my Irish. But luckily, that's not my only background. Um, oh, Chris, I did go through the news story on Next Trip, and I think it's a great news story. It had a lot in it, but I think I'm not surprised that the stock went down because I think the computer selling has nothing to do with. They don't read it. They scan it quickly. I would imagine. I don't know what they put in their algorithms, but I would imagine they would scan it at millisecond, and if it said something like I don't know, a signed deal, 50 million to be received definitively on September 1st. Of course, I'm making it up. That might move it, but it's okay. It's my point isn't to say that it's badly done. It's just that there's nothing in the news that's going to cause the algorithms to stop selling. But that's all right. That gives the opportunity to build a position, that gives the opportunity to learn the story. And eventually, though, if institutional buying comes in, whether it's announced or not, if I think you told me that it's a very tight float in Next Trip, but if an institution came in to buy 500,000 or 1 million shares, I forget how many shares are in the float in it right now. I'm so tired. But if a significant, because it looks like low volume in the stock. Let me see if I can still look at this. I can't. That's what's going to make the box, the bid-ask box of these algorithms, the servers move upward, and that's when momentum will build, and that could happen anytime. Of course, I don't know what I'm just sort of learning it. I don't know what the institutional background is in Next Trip. I also think, I don't know. I mean, I've compared their Lind note with other notes, and I haven't been able to show people because I've just got so much going on. But it's very clear to me that the attorneys, and I've shown that actually, that the attorneys at Next Trip did remove quite a few of the toxicity points, items in the Lind Partners deal. I think there's still risk in that Lind Partners deal, obviously. If November comes and payments are due, I think it's 380,000 a payment. And I think Lind has the right twice during the term of the note to ask essentially for double that a month, twice. So, you can picture if the company somehow, if you don't know the company, you don't know what's going on, you can picture a scenario where they drive the stock price down a bit more, and the company is working and doing everything right. But come November, they go to pay, and Lynn says, well, we want double this month. Because I just don't think people realize, I believe, you can't prove it, but I believe Lind works with the Toad. I think Philip Lavoisier out of Toronto. Well, that's where the toad is, Toronto. I don't think it's by accident. And so I think everyone wants to think that those people are gentlemen. They're just, I think they're all disgusting, but um, I wouldn't want to do their business. I wouldn't want to spend a minute with them. But I can see where they would put a pressure point to somebody that doesn't know the story. And of course, the computerized isn't going through this human analysis, but they may go through a computerized AI analysis that, all right, we scan quickly the contract. It's Lynn Partners. There's a pattern. And so they now have a lot of cash. And they have the plan going, but the computers don't see that there's going to be a slug of cash that allows the company to step away from this Lynn deal. And so my point is not to say the company doesn't have a strategy. I'm saying that the machines will keep selling, and they're just going to keep doing it because they don't see it. But I don't know how they would see it because it hasn't been published anywhere. So my point is, if, for example, and Chris, I don't know if you listened the other day, but I did some whatever you want to call it, due diligence or Googling, and I'll try to find it again. But the answer popped up, and it was really interesting that these insiders, I think what I asked or I suggested was the question, if they have all these wealthy backers at Next Trip, I think it's a Hilton. I read it out. I can't remember. I think it's a Hilton. But anyway, there's a billionaire and there's some other major deep pockets. And I get the fact, even if you're rich, you don't always have the capital. But I asked, why wouldn't they just step in? Why would they go through this nightmare signing up of debt with Lynn Partners? Why expose the company to it? And what was amazing is the answer came that because the insiders already own so much of the company and the stock price is down, that the reasoning may have been that it would put the company in an awkward position to issue equity at these low prices to insiders, especially if something good was about to happen. And, of course, I think I talked about it with you, but it might have been with somebody else. That actually makes a lot of sense. And so one strategy, instead of issuing a lot of stock at low prices, and I haven't any clue what the company calls low prices. I think it's $1.64 on the close. But instead of issuing stock there and being dilutive, that's what everyone always worries about. But more importantly, instead of doing it to insiders who already really kind of own so much, my memory is 60%. I don't know if that's right. It might be 40%. Why not take debt, design the contract carefully, and use, it's always what you use the money for. And I read it out, Chris. I don't know what it means. They're going to go from advertising impressions 1 million to 50 million a month. frankly, you know, I understand metrics in a lot of situations. I don't know what that metric means. But if that converts to revenue and it happens in September, October, and there's cash there, well, then here's what I'm coming a long way. I'm coming to it. If the computers see two things, one, that there's revenue and cash flow coming in, that they're going to be able to make those payments, including the double payment. Well, I think that would maybe have an impact on the box that the algorithms create. The other thing that would have an impact is if whatever's going on, and I look forward. Richard Marshall agreed, I think he agreed, to do an interview with me for everybody this weekend. I think that's what he said, which isn't too far away. And I'm glad to do it. I told him I would be. And I'll ask him, you know. But the other thing that would really scare the algorithms, not scare, they're not scared. They behave in their own interest within their parameters. Is if whatever's going on with the company, and this is a theory of mine, and I said it, I think yesterday as I was going through the AI due diligence. It's a theory of mine. If there's something that these wealthy people know that they didn't want to invest based upon, if some of that gets released and the money gets deployed and some of the milestones or the metrics start to be hit and presented to the world, presented to the investing public under, you know, full disclosure, well, then one or two of those guys could say, you know what, I don't see, this is the tricky thing, Chris. I'm not at all convinced that unless there's institutional buying, that's the big thing. I'm not at all convinced that news or even announcement of something good is going to keep the machines from selling. But if there's institutional buying, and I don't know if there are institutions looking, or if some of those metrics that were announced today will end up on an institutional desk somewhere. I don't know all that. I certainly don't think Nextrip is in the bind where there's some sort of news blockout or quiet period going on. So I think institutions can buy. Anyway, absent institutional buying, I really don't see the stock price going up regardless of news announcements, because these things are relentless. However, if there's enough, and that's, I'm going to ask him, what are the metrics? What should we be looking for? If there's enough there that gets those metrics out there, maybe there is institutional buying in September or October. So getting to my point, what if in October the stock is significantly higher than where it is now? I'm not optimistic for that to happen in August, but I'll ask Richard about it. But if it does get higher, you know, one thing that would kick the algorithms out of there, or at least at these prices, is if the company announced, and I'm making it up, of course I'm dreaming, but if the company announced that Conrad Hilton's grandson, I forget the guy's name, has, maybe it'll just be definitive, he has paid off in full the Lynn partnership transaction, or he's going to pay it off on November 1. And it said it's, I don't know what it would be, 6.1 million. Because of the way the contract's written, other than the enormous original issue discount and maybe some expenses, there's no penalty on paying that. There's no premium beyond that. It doesn't look like. I'm tired. I'll have to try to go back through it. But that kind of announcement, those algorithmic sellers would move the box upward, and I don't think it would be this incrementally. I think it would be significant. First, they would move their offer, their willingness to sell higher. They might keep the bid in where it was for a while, but I think it would also bring in institutional buyers who might be on the sideline that might say, we don't invest if there's a toxic financer involved. Because remember, Chris, if you're an institutional buyer, you've got to know what the denominator is. And if there's a risk of this toxicity, there might be just blanket box to check. Nope. And once it's gone, we'll do it. Anyway, I don't know what the parameters are at various institutions, but I think those would be the two biggest things that would make the algorithmic everyday harvesting of retail volume go away. I don't think it's going to be news announcements. I don't think it's going to be predictions. I don't think it's going to be really elaborate explanations of how good things are going. Why? Because the computers just don't read any of that. What they would read is the company's getting, I don't know. I don't know the ramp, and that's something maybe Richard can talk about. But if the company's going to get $10 million in revenue, they have a contract, and they're going to get $10 million in revenue by the end of the year from one contract, and then the advertising revenue is going to be, I'm making it all up, it's going to be 15 million by the end of the year. And if the computers can see that and it's concrete, they can put the connection together that Lynn partnership deal is going to be taken off the table before any stock is issued, before any nightmare takes place. Yes, it's massively expensive. I think the calculation said it's anywhere in the range of 28 to 30% annualized on that original issue discount. But you know what? If it gets something done and it's a bridge to milestones, it's expensive. I was comparing it, Chris, on a phone call, and I don't mean to pick on anybody at Finger Motion, but just conceptually, Finger Motion took a toxic, a punishing, I don't know if you'd call it toxic. They took a financing with, I don't think it was Univest. I think it was, I think it might have been Roth 2 Decembers ago. And it was a nightmare deal. However, I found out about it afterward, and I think it was at $1.95 or something, but it was a discount to the market. It had all the punishing cost in it. But after I discussed it, I think I even talked about it with Martin Shen. I don't remember. I actually supported it after the fact. Why? Because they had this C2 contract, which had the potential to be big. If the company hadn't raised the money, there was no way, no how that the company would have survived the Chinese New Year period. And I thought in the context of taking that money and funding the C2 contract in size, that made sense. It didn't happen that way, though. Or at least it doesn't look like it happened that way. And then the stock was somewhere in May or April. The stock was 550. And I talked about it, but I thought, you know what they should do? And maybe it even hit $6, but it was up there in that range. They should go, even if it's bad financing, like a bad romance, they should go take it. If the C2 contract, at the time, I thought it was extraordinarily real, and I thought it was exclusive with the government. It was Chinese government funding. It was, had this huge markup in it, and it had all these partners. And I forget, it had a 90-day turnaround, or maybe it was a little longer on the vehicles. So I thought, if they use that money, go get the money at 450, then take it and sign up for these contracts in size, because it was a huge conceptual market, such that every quarter from here on in, I mean, there might be a lag of one quarter, but then every quarter here on in, you're going to have the C2 vehicles issued to the local and the governments, the state or whatever they call it, provincial or state governments. And then you're going to have the revenue. Apparently, it would come right away, but whatever the lag is, the revenue then would start coming every quarter. And you could set up a situation where for 3, 4, 5 quarters, the revenue is coming in. And then with the revenue, you're going and ordering more vehicles set up from the governments, and it compounds on itself. Well, with that kind of revenue, whatever the note was, you could pay it off, and you could take care of any conversions in the stock that way, because you'd have this cash coming in. I don't know if you'd get away with the you might have expanded shares, but once you had all that revenue, you could start buying them back into your treasury. And so to me, it seemed like, gosh darn it, let's go take the money. Let's go hit this C2 contract massively. Let's do whatever I've had it figured out. Let's do 100 vehicles a quarter. Let's just make it happen and start just churning revenue out. Well, they didn't do it. They didn't take the money. So then I thought, well, that's either because he's not a visionary and he's more cautious, because I think that was the time to put it all on the line, or the C2 contract's really not there. So they didn't do the financing, I think, when they could have at $4 or $5. And then they did a financing with insiders at a discount for a little bit of money. I forget the price. It might have been down to around $1.20. I don't remember when it was, but they did a finance, a small one with insiders. But then Chris, the what do you call it? The annual report came out, or the first quarter. They're sort of out of sync with the calendar year. But I immediately went to look at the management discussion and the profit statement, and all I could see is they had rolled two of the vehicles, and it took them a long time. And to my memory, the combined profit or the combined revenue, it wasn't profit, the bump up in revenue was something like $50,000 for the two. It might have been $100,000 for the two. And that's all they got done. And so I just didn't think that. So where are they going? You know? Well, the reason I go through all of that is I think there was a way that they could have, done that big financing, ramped up, and turned into a revenue machine. But they didn't. It's either because of timidity or cautiousness or not having a vision, or it's simply because the contract really wasn't there. I don't know. But you come to a situation with Next Trip, and if they take this money and they acknowledge that it's expensive, but it it allows, after 3 or 4 years of putting all the pieces together, to really go for it and really put the company on the line. We're going to, I don't even know what these 50 million impressions mean, but we're going to create a revenue source from advertising. We're going to go for it with this and this technology app and whatever the hell we just bought. And we're going to go make it work. And, you could look down and get scared and fall like a high wire act, or you just say, you know what, we're going forward. We're going to make it happen. And in that sense, in that kind of a game plan, that we're doing it. And there's revenue that's going to come from it. Well, then the financing takes care of itself. You're able to get it back, and the company actually used this funding to turn it into ongoing revenue and growth. Anyway, I think the computers can see that, and I think what the news release today gives a lot of information. I don't think the computers connect anything yet. What they will connect, like I said already, is defined revenue. And man, as soon as somebody like We Love You Conrad, oh yes we do, comes in and buys out the note, if that's what happens, or if the company does it, that would be a huge jump. But in the meantime, and I'll have to ask Richard, I don't know if he knows, or maybe if he can talk about it, but if institutions start buying, whenever they start buying for whatever reason, there doesn't have to be news, institutional buying will make those machines move up too. So I actually read a lot in the news story today that sounded really good. I didn't know what exactly it meant in terms of metrics. But anyway, Chris, I'm sorry I went on so long. My only point is I don't think that news release all by its own should have been expected to make the stock price go up. But if it is meaningful information that allows institutions to start buying, and maybe they won't buy in August, maybe they'll wait after Labor Day, or maybe they have to digest it until next week, or maybe they're waiting for something else. My point is, the only thing that's going to make the stock go up significantly is if those computers sense institutional buying. If there's a lot of retail that comes in unpredictably with a lot of volume, sort of virally, that can do it too. But as soon as the algorithm sense that it peaked, because they're always probing, they'll just try to sell downward. Anyway, I'm tired. I rambled a bit. Well, I'll hopefully be able to do an interview with Richard this weekend. I'd love to end up doing 2 or 3 interviews in August. I really would. I really would, just to have something else to talk about, and expand our knowledge, expand our awareness. I would love to be able to do that. Chris Laquassier, I'll buy 25,000 Railtown tomorrow just because this idiot is posting here. Yay. That's great, Chris. Nature Boy is back. Woohoo. I don't know if that's me or if that's Gandalf. But Chris, you know what I'm going to do now that I answered his questions? I'm going to go up and I am going to block him. So he's gone. I think it's a woman anyway, but I think I just banned Gandalf. So everybody that had to put up, well, here it is. Chris said it here. Block him. I blocked him. Well, I was going to talk about a couple other things, but it's 9:37, and I can tell that my mind is lagging because I'm tired. So I'll just leave it. I wanted to talk about total metals. I wanted to talk about SpaceX, and I wanted to talk about well, anyway, a couple other things, but we'll leave it for tomorrow. And I appreciate everybody listening. I really liked Jason Harbison. I really liked your question, even though I got a little bit sarcastic. I think at some points I was just outright sarcastic. I think it's good that you brought up his position and his fear, because a lot of people are go through that. And what I just keep having to, it gets to the point of boredom, but that's all right. That's all right. It just shows up in some of my touchiness sometimes. The plan is, it's two different completely different structural operations or strategies. In combination with the toxic lending, but also with the complete absence of any concern from Medina Freeman or Chuck E. Cheese or from the regulators. And I think the attorneys have built a path over the years for it. The sub $5 market is just a feeding ground for the sharks of Wall Street. They're not even Wall Street. They're off Broadway. But whether you have a toxic note, whether you get a toxic note, buy it back, any of that, if you're a low price stock that needs capital, they're going to crush you. They're never going to let your stock price go up. Like, for example, SpaceX, where he could offer shares or cash, I forgot which. But he was able to take, I think, an advantage of an inflated short-term price and add to his company. They never give that option. They just constantly grind it down. But there's no alternatives out there. There's no stock market in the world. If there were, everybody would go there. But there's no place that gives a fair chance to retail or a fair chance to the CEOs. And there's no place to raise money quickly. So anyway, there are ways to get through it, but it's got to be a wise game plan. Anyway, I'm going to leave it there. Thank you, Chris, for suggesting to block him. I did it. I appreciate everybody here that gave due diligence. I didn't expect to be on this long. I thought I would go on for an hour and a half. And Jason, I do appreciate that we went back through the whole argument for Railtown, because I think your friend is not the only one that has. It's just psychological to have that fear, to see the stock price now. And that's what they prey on. That's what they prey on. And as a retail, as human beings, when the stock's up, we don't sell, we buy more. And I do it too. I'm not judging anybody. So we have to be ever vigilant to, I don't know if the word's discipline, but we have to be willing to go against the crowd. And the best thing we can do, I think, is build a position when no one else is buying. And going back to Chris, that may be exactly the case in Next Trip. I think Ward came up with 2 other companies that it may be the case of. I certainly believe it's the case with Railtown. The gold miners, silver miners, and I think Total Metals is a perfect setup. Anyway, with that, it's 9:42. I'm going to wish everybody good night, and I'll probably come on tomorrow. I'll try to aim for mid-afternoon, but I got a lot to do tomorrow too, so we'll see. But I'll do my best to come on earlier tomorrow. So with that, peace, love, out.